Myself to the stream. Good morning, ladies. Good morning, everyone. Good morning. Welcome, everybody. Since it's just me so far, I think it's me, Marilyn, and Kathy. Good morning, ladies. I so appreciate my sisters. I just appreciate y'all more than you know. Marilyn knows. It's so good. If you don't have a sister like Marilyn in your life, you better get you one. You better ask. You better ask the universe to provide because it will. Let me get some housekeeping out the way. Good morning. My name is Sandra, and welcome to my channel From Lack to Legacy. On this channel, we're all things money. You heard that bell. Investing and mindset, particularly how to go from a scarcity mindset to a mindset of abundance. If this sounds like something that you're interested in, you have found your place. Let me tell you what you're looking at. This is a learning community. I started taking a class about 6 months ago. And once I saw the opportunity for women to make money, particularly Black women to make money, I couldn't stop telling people about it. But there's so much that you still have to learn. There's so much that I still have to learn. And so I figured I would open it up so that we could learn together. I don't want anybody to make some of the mistakes that I made along this journey. So I just decided to open it up so we could do it together. Because I promise you, the journey is so much better together. I think there's an African proverb that says, if you want to go fast, go alone. But if you want to go far, go together. And I just believe in that whole shared mission. I believe in shared economics. I believe if I get a good piece of fruit, I'm going to tell my sister about it. A girl told me that so many years ago. I was in my 20s. And she was talking to me about God, really. She was saying, but girl, have you ever had something so good that when you get it, you just want to share it with somebody? And that's how I feel about this. Morning, Johnny. Welcome, you guys. Welcome. So today we're paper trading like we always do. Um, y'all know I've been watching QQQ do its thing. She's been shimmying down. I have no money in QQQ, but I did take a lead from Maryland in our other past trades. So I do have some open contracts on Love. So I'll be keeping my eye on Love. If and everybody knows LUV is the ticker for Southwest, and Southwest it's been shimmying up. So we'll see. I'm open for discussion today. So let me bring in the chart and we will see what we're going to do today. You know, whatever you guys say is what we're going to be on today. So let me just queue up. I'm going to queue up Love simply because I want to keep an eye on it. Let's see. Are we not connected? I'll fix that. LUV. Okay, and so far she's going up. I'll bring the chart in for you guys in just a second. Let's see. So if you have something that you want us to look at in particular, please drop it in the chat and we'll do whatever. I'm open. Okay. So you should be able to see the chart for this morning. I have the chart up for Southwest. So hold on one second. Let me get all this stuff ready. Get our Trader TV going. And Love closed yesterday at $30. And I want to say 15 cents. So it's up 5 cents from yesterday. And I'm looking to see if it continues in this upward pattern. But the overall pattern, when I looked at it, or the overall trend when I looked at it, was really a downward trend. So I'm expecting that sometime in the next couple of weeks that this will trend down. But we'll see what it does today. So I like to always take a look at Market Watch just to kind of see how the day starts. Baba's bright green. Let's take a look at Baba. Copy, add Baba to watch list. I got the QQQ. I'm going to add Baba to that list just because I want to see what's happening with it. It's so bright green this morning. But everything else that I generally follow looks to be starting down today. Pick at all of them. All right, folks. So here we go. It's another day of learning. It's another day, another opportunity to get a little more knowledge under our belt. I hope you guys are checking out the community tab. I dropped in because we always talk about MACD, TTM squeeze, and the RSI. So I dropped those on the community tab. Please go check it out because there are also links there if you want to get a little deeper, if you really want to know. So let me get this off. Yes, today's morning, usually I do a quote. So I think I'm going to switch it up. I've been doing abundance quotes, but I think I want to shift into some affirmations. And affirmations, I think, have a bit more intention behind them. You really are stating what you expect, and it's like a declaration to the universe. And so I am open to receiving unexpected opportunities, and I hope you guys are too, because we so deserve it. I don't know anybody who works harder than Black people. I really don't. I think everybody probably has the capacity to work hard, but we have a proven track record of working hard. We've always done the most with the least. And so I want us to be open to receiving something in return for all of that hard work and just the study, because this is not a joke. Learning to manage finances, learning to invest. Hey, it takes some time. You don't just get it through osmosis. We learn by doing, we learn by talking, we learn by being in the vicinity of money and wealth management. So, y'all know I'm all about that life. So, let's get over here. I'm going to go over and switch to a chart. Let's see. And we can scroll through. Well, look at love. Oh, Lord, 30-30. I think we should buy some love calls. I really do. I do. She's been on a tear, doing all kind of crazy. And so I'm going to take this one. I'm taking this one on the chin, folks. Because yesterday I kept saying I should have, and I wish I could have, would have, should have, and I should have at the beginning of the day. So I'm going out 17 days, and just for kicks, I'm going to purchase us a few love contracts. I'm looking because here we have some open interest. There isn't a lot of interest there. There is some here. This is the least expensive. 78, so 81, 82. The spread is only 4 cents. So I'm going to buy us. And you know what I want to do too? Nope. I want to do it right. So I'm going to back out of this and I'm going to do it with an OCO, which is, no, I don't want that. So let's close it. I want to go and do it with an OCO where we set our targets and all that other good stuff. This is 8 cents difference. Oh, wow. Look at that spread. Ooh, 10 cents. Ooh, that jumped. That's a call. Let's go look at something maybe not so. Let's look at 9 days out. I want something with a spread that isn't that. 86, 94, 17, 58, 66. And I'm looking for something with a lot of open or some open interest. What is that? Oxy sustainability. A lot of people feel that Oxy is Delta Theta. Oxy very levered to Permian. Delta Theta last high low. I don't like the high low. You guys, before I do anything, I'm gonna go ahead and change the layout. Just make sure I said hi to everybody. Just so you guys know, I'm looking at the options chain, and I don't like the high. I don't usually use the high low here, Mark. I don't like any of these. And so I'm going to go ahead and customize this options chain since we aren't in a hurry. I think what I love most about these days is that since they're learning days, it's low stress. It is such a low stress day. So I'm going to go ahead and take the time. I think we have plenty of times to find a good entry for any um, equity that we might want to purchase today. So before I do anything, I like to have the delta theta. I don't like the last high low. I'm not even that crazy about having the mark. I don't necessarily need it right here. I can find it other places. So I'm going to go ahead right now and customize this chart. And this is my options chain. So if you don't know where the options chain is, let me take you back. Normally, we're looking at a chart, and this is the chart for Southwest. Southwest been doing her thing. But what I want to do is set us up to purchase contracts. And today we're going to practice how to purchase a contract with an OCO order. And that is where we set our limit and we set a stop. It's just good to do. Lord knows I've traded long enough without setting those. I know how to do them, and it's a good thing to do. So if you don't know how to place an order for an options contract where you set a limit, that is, you set that contract to close out once you reach a certain profit, and a stop where you set that contract to sell if it loses a particular amount. That's what we're going to do, set those safety guides in. So the way you do it is you go over to the trade tab. And when I hit the trade tab, my options chain falls down. Let me show you what it looks like when it's not expanded, because your options chain may look like this when you hit trade. The only thing you have to do is hit these little carrots and it will open up this options chain. And we can see the dates here. These dates or these numbers that are in parentheses tell you how many days to expiration. So if we purchase contracts here, these expire in 3 days, 9 days, and 17 days. You would purchase this 3-day. I think if you're really sure, you're reasonably sure about your thesis, because you only have 3 days for it to work out. So they don't have any same day expiring contracts for love. If you ever saw a 0 or a 1 in those parentheses, 0 days expire that same day, 1 day expire the next day. And of course, the sooner they expire, the less expensive those contracts are. You could purchase a contract. These that go out beyond a year, I believe, are called leaps, LEAPS, leaps. And you can look that up, or I'll post it later in the community tab what those letters stand for, LEAP. But those are long range, those are long-term options contracts. And of course, those will be the most expensive because you're buying all that time. So I prefer to do something a little more intermediate in this regard. So I would look at the ones, let's say 9 days, because we're practicing. And so once you tap that, I'll do it again. Once you tap that little sideways V, I call that a caret, it opens up the options chain. So we're going to look for calls because look at love just shimmy. And I'm telling you, Lord, 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 I'm on the wrong side. Just so y'all know, in my real money, I'm on the wrong side of the deal. But I have so much time. I don't have these contracts. I purchased in real life the ones that expire April 14th. So I think it's either 9 or 17 days for them to work out. So I'm going to go with this one that expires April the 6th. I tap it, and because she's really kind of going up, I'm going to purchase a call, but we could do both. We could purchase calls, and we know that we purchase a call when we think that an equity is going to increase in price. We purchase a put if we think that the price is going to go down. So let's look over here. I generally like to get the tightest bid-ask spread that I can get. 25.34, that's like 9 cents. That looks pretty good. But before I do that, that's what I wanted to do. I don't want to get sidetracked. I want to customize this because I don't need some of this information here. I like delta theta. I don't need the high. I want to remove it. I don't want the low. I'm removing that. I don't necessarily want, and I don't know what last size is. I don't need that. I like delta theta. I like open interest because that lets me know how many people are in that contract actively. I like, what else? Delta theta, open interest. We got bid ask. You have to have bid ask. And I think that's enough for me. I don't like that thing to be too crowded either because I like to be able to see what's going on. And I think one of the things I like about these contracts is not a lot. You know, like in QQQ, you got a ton of options, contracts that you can pick from. I like having it a little more narrow. Here, we're right at the money. There's only 7 cents difference between this is called the spread. The difference between the bid and the ask is called the spread. And you generally want that as tight as possible. And then I look at delta and theta because theta is what you're paying. We multiply this by 100 to calculate what we're paying per day. And I'm not interested. I like a low theta. I really do. Generally, when your theta's lower, your delta's higher. So look, that's 15. This is a 10 cents different, but there's nobody in there. So I'm gonna come here to this is 10 cent, 27, 25, 35. This is 10 cent. Let's start here. We'll buy, and I'm gonna do that one more time because again, I said I want to do it as a OCO. So let's buy custom. I'm going to go over here. We buy custom, and we're going to go buy with OCO bracket. And if you notice, I hope this comes up for you guys. I'm just going to, Marilyn, please let me know if you can't see any pop-up windows. But I think you should be able to see this. So it comes up what we're going to buy, and these two red lines allow us to put in our two stops. So because I usually try to purchase just like I would in real life, I would never buy 10 contracts in real life unless they were very affordable. But I generally start with 3, and I like 3 because you can always shave off your profits if you have 3. You can begin to cash them in and leave what we call a runner. But man, we should have been on this morning. We could have made some money right out the gate. But it's not too late. So let me go ahead and get this going real quick so we can still see if we can cash in on some of this movement. Good. Thank you, Marilyn. All right. So I just changed the number. We're buying 3, so we want to sell 3, sell 3. We could also change this number if you wanted to shave off. You could change that to sell 2 if it reaches your profit, but I'll leave it just for parity's sake. We're purchasing 3, we're going to sell 3 if we reach our price target. We're going to sell 3 if this thing begins to go in the opposite direction, if the trade turns against us. Okay, and so I'm going to come over here and I'm going to change these 2 percentages. So I hit that little, it's like a chain lock. I unlocked it and I put percent. And generally, we in it to win it. So I'm going to say if we attain 20% profit, that's up there. But if we get to 20% profit, it'll stop us out. It'll take us out of there. My stop, that trigger, I like to set it tight because you don't want to lose money. So I'm going to hit this here. I just unlocked this and I'm going to put it on percent. And generally, I don't want to risk more than like 3 or 4%. I don't want to set that stop too tight that it doesn't give the trade, wiggle room because it'll go up, it'll go down. So I'll set it conservatively at 4%. So if we start to lose more than 4% or 4% of our investment, this trade will stop us out. And because we're learning, I don't do this with my real money, but I'll go 5% if we lose 5% of this investment. And that way we can also see if it does stop us out, what is 5% of our investment? Okay, so I'm going to go up here. Dee told me this, and I'm not sure if there's someone in the chat who can address this, that we can adjust this price that we're offering for this contract. So of course, I'm going to ask for a little off. It's not much, but I'm going to take it down maybe 3 pennies and we'll see what happens. Okay, so now I have this order set. This green line says that we're going to buy 3 contracts of love with an expiration date of April the 6th. Our strike price is $29 and it's a call. We're expecting the price to go up, even though the price is coming down now, you guys. But that could be a nice little pullback. I'll look at it. A pullback is where price surges and then it gives back a little. I think a technical pullback is when it gives back less than 50%. So anywhere from, 25% is usually what I would be comfortable with in a pullback. But there are people in the chat who are smarter than me. They can speak to it. All right, so we have this order set. I'm gonna also do, yeah, best is fine. I'm gonna do good to close. And that's GTC means good to close or good to cancel. Good to you cancel it. All right. And I'm going to hit confirm and I'm going to save it because what I want to do is peek at the chart before I send anything. And let's just look and see. Okay. So let me just check with the chat real quick. Hey, everybody. Welcome, welcome, welcome. Oh, I see now. 29 strike price. Did you see it, Johnny? Okay. So what I'm going to do, you guys, is just scroll back over love. I'm going to look at the weekly since we're learning. I'm going to go back and look at the weekly chart. I might even look at the monthly because what I'm looking at is what has this overall trend been. We could and should have at this point, if you're investing, you would have plotted your support and resistance. You would have looked at any significant price levels. I think it was Johnny and Living My Dream Trading that they showed me how to do trend lines. Those are all things that you would plot on your chart before you purchase or before you go to invest. So why don't we work through those things as well? Hey, Shauna, welcome, welcome, welcome. So let's go ahead and do it, you guys. I'm going to switch back over to the chart that you guys are looking at. And the first thing I'm going to do is just look at this chart over time. I want to see what has love been doing over the last few months. Is it in an upward trend? Is it in a downward trend? So let's do it. And the way we do that, let me see. I want that out the way. The way we do it is we change our time frame. So I'm going to go to a monthly time frame. Let's see, because I have one on here, I think. Okay, 5 years. This is a monthly. I'm just going to look at what love has been doing over since July of 2018, it looks like. So we can see this equity has traded at a low of $22.47. That was back in 2020. It got to a high of $64. Let me get this out the way. Whoops. It got to a high of $64.70 back in April of 21. So this is just month by month. Each one of these candles represents a month of trading, a month of price action. And so look, okay, looks like, those red candles mean price is decreasing. And it looks like it was kind of stagnant here for a little while. What we would call consolidation, not a lot of price change. And then it went down more. And then, that little thing it does over and down some more. And it just looks like over the last 2 months, it's been trading right at the 200-day average. This is my 200, just a little bit above the 200-day average. But these last 2 months, price has gone down. Really, the last 1, 2, 3, 4 months, price has been on a decrease. We can also see from our MACD, this red, that was a downward trend. Looked like it was going to cool, and maybe it's, still kind of, it got bright red again. You all know, this is trading by colors, color by numbers. It popped up red again in our lemon squeeze. And so it feels like, and it looks like, and I don't want to say it feels like, just from what I see on this chart, price had been trending downward. The next thing I look at is the RSI. The RSI is at a value of 38.8. It just clicked up to 38.9, but it's under 50. And it looks like it's pointing down. So these are things that would lead me to believe that over the last few months, price has been on the decrease. That's over the month. So let's look at it on the weekly. Let's see what we're going to zoom in a little and look and see what price has been doing over the week. And again, we had a high of 64.75 back in April of 21. And it's not a dramatic price. I mean, it wasn't like price tanked, but it steadily crept down. And today we're trading at $30.42. But let's zoom in and look at the last few weeks a little more closely. I think this was earnings. What was that? That you see these symbols here, they mean something, you guys. Oh, that was a dividend that was paid. So you see that dollar sign, that green dollar sign, if you hover over it, it tells you that at that time a dividend was paid. This red and blue, let's look at, if we hover over those, this was earnings. There was an earnings call, and the blue, yeah. So earnings were reported, it looks like on January the 26th, 2023, they had an earnings call. So every time we see these green dollar signs, that's when a dividend is paid. Okay, so we're looking at price and what price has been doing over the last few weeks. And again, these are all of our simple moving averages. This is our 200, this is our 50, and I switched. I used the 9 and the 20 day. So my 9 is blue and my 20 is yellow. And it looks like for the last 1, 2, 3, 4 weeks for sure. This week, this is what I'm a little concerned about. But price had been trending down. And I'm telling you, when I purchased that contract, I was looking at this and it was trending down. So I figured it would continue to trend down. And what do you know? Of course, price is starting to turn up. But the RSI had gotten so low, I should have really kind of anticipated that once it gets so low, it may respond. It may have a reaction by bouncing off and trending up. And that's exactly what happened here. I thought that it might stay long, continue to go down a little lower. That might have been a good thesis had I purchased here because it gives you some more room for the price to decrease. But I purchased here. Don't ask. You live and you learn. And I'm looking here at my MACD. You can see that the trend is cooling. And well, that makes sense too. So you've got this green candle coming here. And so price is trending upward since, let's see, that was the March 27th, the week of March 27th. And that's exactly what's happening. So that's looking at it on the weekly chart. Let's look at it on the daily chart. This is each one of these candlesticks that we're looking at is going to represent a day. And so I'm going to make it a little bigger just so we can look at these days a little more closely. And I'm just trying to figure out like what has been going on? Where are you? Because of course it's easier for me as a new trader to trade with a trend. And so if you look here, this was like 6, 7, 8, let's say March 9th, 10th, 11th, 12th. These days clearly price was trading lower and trending lower. We got a little consolidation here these days, not very much change in price, a little spike and then down again. And I'm sure I purchased somewhere in here. And what did price do? Boop, pop up. But there's no, this is on me. Look at the RSI. It was clearly, these are sellers, clearly oversold. And we talked about that. When the RSI is oversold, it can stay down there a while, but it can't stay down there forever. So it's no surprise that it bounced up, got a little relief. And I think I got in around here. It was down there and I thought it would continue to stay down there or even go lower. It did not. You can see the RSI turned up, indicating an upswing in price. You can see the color change in the TTM squeeze. When it's red like that, you can see. So over the last 3 days, price has been trending upward. And so we're at $30.36 today. So we need to put together a thesis. Do we think price, based on what we see, Some other things that we could do before we formulate an entire thesis is that we could plot our support and resistance. We could look back over time. We could plot trend lines and all of those things. So let me just check with the, okay, Johnny, we'll see you in a little bit. All right, Elle. Oh, no, I hope everything's okay. Yes, under 50 RSI on daily is bearish on the daily time frame. Thank you, Johnny. I'm telling you, all these little things. You all, did you all hear that? Let me post that up there so you can see. Yes, under 50 RSI on a daily chart is bearish on the daily time frame. So if you look at your daily time frame and your RSI is under 50, that's a good indication that that is a bearish trend. And bearish means it's a downward trend. We know that bears swat down. That's the way I remember it. Or we bear down. And bulls, when they attack, they stab up. So a bull trend is going up. If you need something to help you remember what is bearish, I don't know, I'm from Chicago, so bear down, Chicago Bears. That's our team song. So that's how I remember. Bearish is down, bullish means going up, bears red, bulls green. I hope that helps you guys. So let's go back and look at our RSI on the daily chart. We're on the daily chart, and our RSI is at 38. So that generally means that it's bearish. It is in a downward trend. But for the short term, you can see these days, even though it is clearly trading underneath our RSIs, it's starting to cross over. It's pulling up. And so is price, because we reached a low of 28.95. And I'm telling you, I really thought those lows were going to continue. Yes, I did. And I bought puts. Thank goodness I only bought a few, and these are really reasonably priced. I think I bought three. I bought them separate at three different prices so that I could see how they respond. And so I didn't put a lot of money out. These are pretty inexpensive in terms of if you're thinking about, purchasing contracts compared to QQQ. These are reasonably priced. The stock trades itself at $30.36. So the options contracts are pretty reasonably priced as well. Okay, so here we go. It hit a low at 28.95 and she's been on the upswing ever since. Not what I wanted to hear, but we can capitalize on this if it continues to move up. So I'm going to go ahead and even zero in a little bit more. I'm going to look at it on the hourly chart to see, like, what have you been doing over the last few hours? And here we can see from the time I purchased just about, okay, thanks, Marilyn. Marilyn says, don't forget to remove that banner. How do I get that thing out of there? Okay, hide. Thanks, Marilyn. Marilyn's my eyes and ears, y'all. Marilyn makes this whole thing go, just so you all know. That's the real truth. Marilyn makes this thing go. Marilyn is so gentle. She gently reminds me to wake up. I'm up in the morning. This is just a sidebar. If you guys don't catch Kathy's morning journaling, you should. It's early for me. It's at 5:30 in the morning for me. So Lord knows I am journaling with one eye open and one eye closed. And sometimes I will go back to sleep. Marilyn very gently reminds me, she's like, sister, are you ready for the day? I just appreciate that. I'm telling you, if y'all don't have a Marilyn, you need to get one. If you don't have good sisters like I have, you know, you need them. You need them in your life. Okay, so let's go back to it. Now we're looking at the hourly chart. And so I promise you all, I believe I purchased here or here puts. I know I did. It was here because it was this big old red bar. And I'm thinking, oh, we gonna make some money. And what did this thing do? Turn upward. And I'm going to confess to you guys what I didn't do. And that's why I'm going to show you how to do it. I didn't put an OCO. I didn't do it with an OCO because it would have stopped me out. Part of the reason I didn't do an OCO is because I purchased the contract for so long. And generally, even in an upward trend, you're not going to go have only up for 14 days. I haven't seen that in a long time. That could happen, but it's been 1, 2 days. We're going into 3 days. The price hasn't gone up that much. Let's see, from 29, it went up a dollar, almost $1.50. So that's a lot, but we'll see. So at any rate, we're looking at this over the hour. So we can see steadily up, 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 up. Not a lot of red, folks. So look at this. Let's look at our MACD. Our MACD is showing, the trend is still, looks like it's picking up. Our RSI on the hourly chart is almost overbought. That I like to see. That's a good thing because you already know that when it gets overbought like this, it can stay up there. Now, I'm not telling you it can't. It can stay up there for some days. But there, on occasion, and oftentimes, it'll go up there and it will reject. It will come down. I'm also looking at the color of our TTM squeeze. Our TTM squeeze, we know when it's upward, moving upward, and it's increasing these bars, we know, and we can see price did just what this, it correlates with this. These bright green bars, yes, price is going up. When it starts to cool, you see these dark green bars, you see that little thin candle and that red, yeah, those correlate. You can also see how the RSI dips a little, but that trend continued all the way up till it was almost overbought. And it's overbought when it hits this 70, this line here, this 70 value. And now you can see that it's starting to trend downward, or it's cooling a bit. And we saw that it backed off of that. And now it's back up there. So I'm just going to be curious to see what it does. I am hoping, this is what I'm hoping for, because in the real world with real money, I want to see this trend downward. I want to see it continue in that long-term trend that we saw when we looked at the monthly. Over the monthly, it was steadily coming down. Oh, in our weekly chart, it was coming down. And I'm just going to go back through those real quickly. I want you to see what I'm talking about. Where's the monthly? Here we go. And you can see down, the price is just steadily decreasing. We went from 64 all the way down to where we are now, $30. So I'm hoping some of that continues. We started and it still looks like in the long term, you see how this is still pointing down and our RSI is pointing down. We got that bright red bar again. I'm hopeful this thing hurry up and turns around. Let's look at it on the weekly. But hope ain't a plan. Let's be clear. And hope is, we don't trade on hope. Although that's the position I find myself in this morning. But that's not how you trade. We don't trade on hope. We trade with what we see in this chart. And still, price is steadily trading underneath, and this is on our weekly chart, all of our moving averages. So it is trading underneath the average price for the last 9 days, 20 days, 50 days, and 200 days. So, hey, it's still in a downward trend. While we might see a little rally over the last week or so, I'm hoping that we continue in this downward trend. These big bright red bars, this is a little concerning on my MACD, this darker red. That lets us know when the trend is cooling. This RSI, got it. Okay. So let me get over to the daily and then I'll get over there and get a question. Okay. Let me see. There are quite things to look at. Kathy says, how many indicators do you need before making a decision for a transaction to buy? Kathy, I look at a lot of things. But truthfully, when I'm getting ready to enter, I will say this. There are two things that I do. There's that work that you do like the night before. And the work that you would do the night before or the day before or even on a Sunday before the trading week is just what I did. You would look at it, just look. at your chart what it said for the month. And we did that. And the month confirmed, that monthly chart confirmed this is in a downward trend. Clearly, it's in a downward trend. I would do that maybe the day before, honestly. Some people do it in the morning. You can do it in the morning too, because that's fresh information. I always look at that weekly, the daily, and the hourly chart because that is going to give me a bigger picture. I know what it's been doing for the last few weeks. I know what price has been doing over the last few days, and I know what it's been doing in the last few hours. That is something that I would do the morning of. Now, once I figure out, oh, it's a downward trend, that's all I need to know, really, up, down. Then I need to know like where it is relative in price. So that would be plotting your support and resistance. And I'll show you that today too, how to plot support and resistance. And the reason we do support and resistance is because we want to know if price is going down, but it's near a support, we know she might slow down as it gets to that level of support. Because historically, it has, stalled out there, or sellers have come in when the buyers have come in when the price gets so low. It's like with any market. If somebody wants to buy Southwest, they're waiting for the lowest price. So once price gets really low, if it hits that support, I want to know because it may not go down any lower. And so that might affect my decision to buy. I might wait till it bounces off of that support to buy a call. So it seems like there's a lot, but it's really, for me, there are two camps. I look at the long term. What has this equity done over the long term? What did it do all month, the last week, and in the few days and hours? Then once I decide, okay, I see that price is trending lower and we've got some wiggle room because we're not going to meet a support price for maybe 60 cents, 70 cents, a dollar, whatever it is. That then I say, wow, I got some space. It's going to go down some more. It's got wiggle room. It's got some room for the price to continue going down. Then I think this is where you got to be good because anybody can look at that. I think we can all look at that. A novice can look at it and say it's going down. Entering the trade, that's when I use those indicators, particularly my RSI, because again, if that RSI is hitting at the top, it's hitting at the bottom, those are definitely buy or sell signals. And I hope you can see this, Kathy. When that RSI, and this one, and I posted this on the community tab, so please look at this. When this RSI gets high, I'll show you. Well, here, we'll take it when it's low. You already know it's going up. See how price dipped low, 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 low. The RSI is way down here. It's oversold. That means the price has gotten so low. Guess who's coming in? Buyers. I would too. I would buy it when it was selling at 64 and now it's down to 31, 32. I would buy it too if this is a company I believe in. And that's exactly what happened. Buyers came in, and when buyers came in, what did they do? They pushed the price up. So for me, when I see this RSI is down like this, I'm thinking it might be time to buy a call. Yeah, because price is going to go up. And look what happened. Price went up. And this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. That's a lot of days of price going up. So for someone who purchased a call because they saw the RSI was down here, I would never use just one indicator. What we're looking for, it's called confluence. And that's where many indicators, 2 or 3 of your indicators are telling you the same thing, or they're confirming for you. So look, here's the RSI. It's down low. Did you see how that bar went from bright red to this dark red? Okay, you see the RSI starting to pick up? This is telling us, okay, that downward trend is coming to an end. If we go here, even here might be even a better, because now our lemon squeeze is turning yellow. It's not all these red bars. This is a little foreshadowing that, hey, the trend is changing. Our RSI popped up a little. We had this day, but after that, you guys, we were off to the races. Look at what the TTM squeeze is telling us. These yellow bars, no more, you know, momentum to that downward trend. The TTM squeeze is yellow. Your RSI is pointing up. This on our MACD is not bright red anymore. And look what happened. All these days of upward. We could tell though, this RSI was like our first indicator. Uh-oh, price has gone so low, it's time for it to trend upward. And that's exactly what happened. So I guess the short answer is, Kathy, there are two, I think, and I hope that there's someone in here who can lend something else to this discussion. But for me, once I look at the long term, and I'll go back and we'll do it really quickly again. I want the monthly. Here's my monthly. I see down. Price went from $64 down to 30 something dollars. That's a clear downward trend. Price ain't going up. All this red, price is going down. You see all this red, price is going down. Look at the RSI here, all the way down. Price is going down and has been. That leads me to believe we're in a downward trend. Now I'm going to go over here and I'm going to look at my weekly just to confirm. I just want to see. And again, look at the RSI. Down, 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 down. These are weeks. So since October, it went down, it had a little rally, and then it's just been down, 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 all the way down to almost oversold. And you can also look, I'll blow these candles up a little bit so you can see. So yes, 1 week, 2 week. And even if we started here, 1, 2, 3, 4, 5, 6, 7 weeks of price slowly creeping down. You can see on our MACD, did you see these red bars getting bigger and bigger? This is how I got tricked. I didn't get tricked, you all. What happened was I didn't study as long as I should have. I should have really put together like what we're doing today. I should have really walked through that trade. And so you can see our MACD is even saying downward trend and it's getting stronger. It didn't start waning until this week, but I'm still hopeful because look at these big red bars on our TTM squeeze, still showing an increase in this downward trend as they get bigger. So I would do that. And then I'm going to look at it on the daily chart. And this is just you studying. So I would be studying all of this, just trying to get my mind around what can I expect. And on the daily chart, remember we had all these down days, a little consolidation. That's not unusual. It came over here to the 9-day simple moving average and it seemingly rejected because price didn't break through. It continued to go down. And so we've got these. This candle for me is a little concerning because it has broken above the 9-day simple moving average. And you can see this. Look at this. I think it almost shows red. I'm sorry, these reds have totally basically dissipated and we can see the beginning of a green bar here. We're poised, it looks like, for a crossover. So you guys, I think for us, I think we should be purchasing calls because unfortunately for me, I think this is going to continue to go up. Our RSI is pointing up on our daily chart. It looks like we're poised for a crossover. You can barely see the beginning of this green. I think a better signal would be if we waited for this crossover for sure, and that we saw some really strong green bars coming in. So I would look at that. That's the study part. The other study part I would do is I would plot price, support and resistance, just so I kind of know like what has price been doing, but we saw it. And then if as soon as I'm ready to purchase, I already figured out price is going down, I'm buying a put. Price is going up, I'm buying a call. Now I'm really going to look at these indicators because these are the immediate, this is what's happening right here, right now. And I would look on a shorter time frame. For instance, if I was ready to enter this trade, I would probably be looking at my 3-minute to see when exactly the best time is to get in. And you guys can see, look at this. Look at this. Look. Just going up, just shimmy all up. The only thing about it is that when it's over bought like this, You see that it turns red, it's coming down, it gets a little relief and it's back up there and it's down. So we'll see. So on our 3 minute, we're clearly trading above and we're doing the little bunny hop thing. We're clearly trading above. But you see these tiny candles? That's not a lot of momentum. And I'm looking at volume. It's not a lot of volume here. So I'm not so sure. Do I think, and look, we just had a blue bar come in. So two things are happening at the same time in my mind. We looked over the long haul, and over the last 3 days, price had been creeping up. I still think price, because of those last 3 days, is going to go up. I think price is going to continue to go up too, because look at how far apart these are. It's trading above. I think this is just a little pullback here. And honestly, a pullback is a great place. Did you see that turn green? A pullback is a great place if you want to enter this trade. The only thing that concerns me is how over, these are buyers, how overbought it is. I just, it's not my favorite place to buy. I like to buy when it looks like this, here, because I know I have a better chance of some price increase. Like this morning, right here, this would have been a great place to get in, and we would have captured all of that. Well, we're teaching, so it doesn't matter. We're learning, but that would have been a great place, because look at where your RSI is. It's not all the way up here yet. You've got all that wiggle room, and you saw how those bars were building. These would have been better places to get in. Now, if this comes down a little bit more, let's see, it's at 61. Look at it turning back up. I think it's going to do the bunny hop. That's what I think. In my experience, I think it's going to do the bunny hop, but we could wait a few more candles to see if it's going to start to dip below. The MACD says that, hey, this upward trend is coming to an end, but we don't have a crossover yet. So it's all those things. You're basically watching and weighing. And I promise you, it's no math. That's what I like. It's not hard. It's just watching. And that's why I say watch the same ticker over and over and over. Study the same one, because you really do learn how it moves. Since I don't trade love all the time. I don't feel like I have an advantage trading love, because I don't really know how it moves. But all of them they follow the same rules. So I hope that answered your question. The indicators that I would look at before I absolutely press the button to enter a trade, I definitely want to know where my RSI is. I like to look at my MACD, because it tells me, is this an upward trend? Are we coming to an end? And see, this upward trend is coming to an end. But now keep in mind, you got to keep two things. The long term, though, is price in like months and weeks. If you're talking about holding a contract for weeks, overall price is going down. But if we want to get in here quickly, like somebody could have got in here really quick on a scalp. So it just depends, I guess, too, on the kind of trade that you want to execute. We could have got a quick scalp in, you guys, got in, made a few dollars this morning, and got out. Since the day has already kind of kicked off, we're maybe, what are we? 3, 6, 9, 12, 15, 18, 21, 47, 30. We're about an hour into the trading day, 45 minutes into the trading day. We might be looking more at a day trade. And that's what I think we should do. I do think, because these are so spread out, I do think it may have a little more. The RSI dipped down a little. This might be a good place to jump in, and we'll do it. We're going to jump in and purchase those calls that I set up. So I'm going to go here, and we have these calls that we set up. I'm going to go ahead and execute that trade. So we're waiting, and you can see 3, this is the purchase. Those are our stop. Those are our protections. So now we're just waiting for this to be filled. And it did fill. So we purchased those three, and we're hopeful that price will go up. And since this is a day trade, certainly no less than a day trade, we do have time that we can leave them. So if they don't get profitable today, we can, keep looking and watching for profits over the length of that contract. So let's go ahead and look and see where we are so far. So we're down $1.50 so far. I'm going to pull this up so you guys can see. We purchased 3 calls. We have 9 days to expiration, which means we've got 9 days for this thing to get profitable. We've got 9 days for that price to go up above the price that we purchased at. We purchased around $3. We'll just say roughly $30.50. So what we're hoping is somewhere in that 9 days, price will get above $30.50. We'll see. We can also go ahead and purchase puts just for learning, because remember, we looked at our long term. In the long term, let's go back to the monthly. Over the long term, price is going down. Let's look at it on the weekly. On the weekly chart, price was going down. We had this one day, this 1 week of price trending upward. But this, I'm still holding my calls. I got some days on them. So, my puts. I am still hopeful that price is going to dip lower. So we can purchase puts as well just to see, what happens. So I'm going to go over here. Let me check the chat real quick. Okay, Kathy, we'll see you in a bit, Kathy. Thanks for stopping in, Kathy. I'm going to go ahead and purchase puts as well, you guys. So let's see. Again, when I purchase puts or calls, I'm looking at the difference between these numbers. The bid is what what we would pay. The ask is what they're asking for. And so somewhere in between the bid and the ask, we want these numbers to be tight. You all check what I just said, the bid and the ask. I'll post that too. So the ask is the highest price. The bid would be the lowest price. So that's a 5 cents difference. This is a 5 cents difference. The deltas are thetas. And the only thing the difference is this has got a lot of open interest. But I want a higher, I like a high delta. I really do. Let's go with a mid-range. Let's go here. This is 6 cents difference. So we're going to go here and buy. I'm going to buy custom. I'm going to do the same thing with an OCO bracket because we're going to set up our protections. We're going to buy 3 contracts. We would be selling 3. I'm changing these numbers so that they correlate with what we have. Okay. I'm going to go over here, and our limit is when we want to take profit. So I usually set the limit pretty high. I'm going to change this to percent. And once we get to, let's say 15% profit, we want this to stop. We want it to sell at 15%. I'm going to change this to percent. And what we're telling Thinkorswim now is that we don't want to lose a lot of money. If we start to lose more than 4%, I'll do this one at 5% like the other one. Let's do 4% just to see what that is. At 4%, if it starts to lose more than 4%, stop us out of this trade, sell, because we don't want to lose a lot of money. So I'm going to confirm, and I'm going to save it. And the reason I save it is I always like to go back over to the chart just so I can see, like, when is a good time to get in this trade? We don't want to just jump in. So let's see. I'm going to go back over here to my 3-minute and my 2-minute. I'll go look at it on the 2-minute, because now this is where we want to be a little more precise. We want to get in. This looks like it might be a good time, y'all. This thing is coming down. It has come down through these. I know we talked about this, the 9, the 20 to the 50. It's a good time. I would enter. So I'm going to go ahead and enter these puts. See, confirm and send, and we'll see what happens with those. So you can see this green, we're waiting for that order to be placed. We're waiting for them to pick it up. If they don't pick it up in a few minutes, I'll go back in and maybe even do it as a market order. I don't like doing a market, but I will to get into this trade. So let's see, prices at 30.48. It's really just kind of sitting there. You all see that? It hasn't gone up too much, gone down too much. It's vacillating between 50 and basically about 6 cents. It's not doing too much. Okay, still, let's see. Buy 3. And I'll give it a few more minutes to fill. And the way you can check to see if it has filled is you can go here. Oh, it just filled. Did you guys see that? It just bought those. So we're in the game. Let's go and look. And you can see we're at break even right now. So I'm going to go here. If I hit this, I don't know if you can see this, but the one on top are the 3 calls. The one at the bottom are the 3 puts. And we're at break even. Our puts have lost $1.50. Our calls have made $1.50. And we didn't spend a lot on these. This was $175 a contract. These were $166 for each contract. So we've put less than $500 out there. 300, 400, about $400 here and there. Again, these contracts aren't very expensive as compared to QQQ. And forward contracts are even less. All right. I'm going to let you guys watch that. I need to get another screen up because I can't really see the chat when I toggle back and forth. So I'm going to get my other computer just so that I can monitor the chat on another screen. There are 14 of us here. So, hey, y'all, hit that button. Hit it, hit it. Let's see. Uh-oh. I'm going into the live stream myself. Yeah. If you're here, don't forget, hit the like button. We've got 14 people watching. You guys, it costs you nothing, but it's a big thing to me. So please hit the like button. Please subscribe. Please share the channel. Don't you want all Black folks to get rich? I mean, and that isn't even the point, though, is that I want everybody to learn about investing. Really, I do. And this same chart that we're talking about reading is the same chart. You don't have to buy options contracts. You can purchase stock. You should be able to read a chart. If you have a 401k, if you own Apple, if you own Amazon, and we should, most of us use Amazon, most of us have iPhones, Apple, whatever you're using in your daily life, if you buy Procter and Gamble products, whatever they are, if you bank at Bank of America, wherever you're spending your money, you ought to know what's happening with that company because you are indirectly an investor. So you ought to directly be an investor. And I promise you, the same chart that we're looking at. Okay, hey, not bad. We made $12 so far. Oh, wait, did something stop us out? Oh, okay. So we set that call. We set that to the calls were losing money, $24. So remember, we set that. Let me make sure. The calls, did you see that? It sold us out because we lost $24. That was a tight stop. So you see, you might not want to set it that tight. I set a really tight stop. I think it was like 4 or 5%. And so once we got to it, it was like, yep, let's get her out of this trade. So the calls got sold. We still have our puts. Let me look at the chart. Oh, yeah, look. Price did this big old jumpy dumpy thing. I'm sorry, that is not very technical trader talk. But did you see how price dipped like that? That's why you put in a safety, because we would have sustained all of these losses without that stop. Y'all, listen to me. Take it from me. Put in an OCO order. It will save you money. That thing automatically stopped itself out because this big, sellers came in. And let me tell, I'm sorry. Yeah, sellers came in. This is not us. We're retail traders. We don't make candles. Some big institution just came in and sold. That's a lot of money right there. To make a candle that big, that's a lot of money. But I want you all to pay attention to this one too. I learned this one in Modern Black Girl, that when you see this, usually they use a 9 and a 13 day. I'm using a 9 and a 20. But this is a move, baby, and it happens. You can I ain't gonna say you can bank on it, but you can go back and see it from the 9, the 20 to the 50, and it sure happened. Now, if we get a red candle and we continue to go down to this 200, I'm gonna be happy. So you saw price dip very quickly from $30 and like 45 cents to $30 and 34 cents. I'm gonna be curious to see, does this 50-day moving average hold this price? Because that's what the average price has been over 50 days. I want to see, is price going to bounce back up, or is it going to continue going down? Is it going to consolidate? Because it can only do three things. Either it's going to reject and bounce back up, or it's going to sit on that line, and that's called consolidation, or it's going to break through and continue downward. So we will see. So our calls got stopped out because that big money move, and that's good for us. We only lost $24 on that trade. So let's go back and see. Here is what we have made so far on our puts. Our puts made $22.50. But to be honest with you, that was a tight stop. I mean, I think I would have been willing to risk more than $24. So that's some learning right there. That if you really want your stop so tight that you only, I'm willing to risk maybe $50 to have a trade work itself out. $24, that's lunch. I would have been willing to set that. I think we set it at 5%. So maybe the next time we can purchase some more calls just to set that OCO order again. And this time, instead of having to stop so tight, maybe stop it out at 10% if we lost 10%. Because we set it at like 4 or 5%, and that was only $24. So I'm not mad, but it shows you how those protections work, and you need them. I would say don't trade without them. I've done it and I've lost money because I'm just it's not even lazy. It's just thinking you can catch it all. You can't catch it all. My attention was turned and diverted for just a second, and that big old price dip came in. So I would say to you, take this, watch it in the replay it, learn how to create an OCO order. It's a custom order where you put in a limit. It tells Thinkorswim sell when I make this much profit. And it also tells Thinkorswim to sell if I lose this much money. And so it helped us this morning because we only lost $24 on that trade. But the truth is that's too tight. I would have been willing to give it a little more wiggle room and maybe risk $50 on that trade. That's just me. But you have to set your stops to what you're comfortable with. I'm out here, $50, I would be willing to risk $50 for a long-term trade like that. So let's get back to the chart and see what's happening. Okay, so look at it. Do you see how these candles, they aren't very big, they aren't very strong. but they are just right here at this 50-day um, simple moving average. They're respecting this price. They are not, they didn't just dip below. So let's see what happens. It's interesting to watch. You guys, I don't know. I'm gonna go back and look at the daily chart. I don't know. I still think price is gonna go up. I really do. I think we should purchase more calls, and this time we should alter that stop because I got a feeling this thing is going to recover and get right back up there. I really do. So let me just check the chat to see. And I'm going to go get my other computer, like I said. The OCO is my new best friend. Yes. Yep. Yep. Saved us. Yep. It saved us some money. So what I'm going to do, let me go ahead. Consumer confidence report came out. See, you need to know this kind of stuff. We need to know this. And generally, I will post that. I need to go back over to Fed Chair website, the Federal Reserve website, and put that calendar up so that we know exactly what's happening. So, you guys, I'm going to turn the news on. I have it on. I just don't have the volume up. I'm going to turn the news on, and I'm going to go get my other laptop so that I can watch the chat too. Yeah, that was a good save. I'm not mad. I would probably have a lot more money in my pockets, y'all, if I always religiously placed an OCO order, but that's why you do it. Okay, so let me get you guys set up. Let's get some news going today. And to be honest with you, I'm gonna see. I've never done this. I might want to revisit that order and see if we can't give ourselves a little more wiggle room even on these puts that we're holding. So let me give you all some volume here and give ourselves a little more wiggle room. I gotta close that down. Okay, so we don't get feedback.
Really briefly, because I don't want to go over my 5 minutes. Mr. Bruin, Chair Gruenberg, the FDIC announced the sale of SVB and to First Citizens Bank and Trust from Senator Tillis.
And I'm going to turn the volume up on the news so you guys can hear it. Hey, Francis, welcome, welcome, welcome. I hope you saw that, Francis. We had a very great example this morning of why it's important to have your OCO, your custom order prepped and ready, because we got stopped out of a trade and it saved us from losing too much money. Thank goodness. If you didn't, watch it in the replay. You all give me one shake and I'm going to go get my other laptop. I'll be right back.
had expressions of interest. I mean, remember, this was a
Marilyn, you
very
know what? I
rushed
forgot
process.
that when
If
I
may
take
say that,
myself out of the
the bank
stream,
failed on
I
Friday
take the
morning.
sound out.
We had to,
I
the
have to
other institution failed
remember
over
that
the
if I
weekend.
want
We
to
had
take
to set
myself
up
out of the
two bridge
stream,
institutions
how do I
to
do it? I
manage those
forgot.
failed banks. To your point, though,
Oh,
we
I
had
just take me
expressions of
out like
interest. We
this,
quickly
like
set up a
this,
bidding
and you still get the
process
sound.
that we ran
Okay,
on
I
Sunday.
got
We
it.
received two
I got
bids.
it now.
One wasn't valid because it had not
Let
been
me get over
approved by the
here.
board of the bank. And the
Open up.
other, after we evaluated it, indicated that
I
it
just
was
want to.
more expensive than a liquidation of the institution.
I forgot
would have been
that. If
to
I
the
take
FDIC.
myself
So
out,
in
I
effect,
take
we
the
did not
sound
have
out.
an acceptable bid. And it was really a determination that we made to try to set up two
And what I
bridge
really need to do is
institutions,
just move me out of the
to manage
way.
for a short period of time these two failed banks,
Okay.
and then to organize
Okay.
a bidding process,
Perfect.
an open
I'll
bidding
put
process
myself
for
back
both
in there.
institutions, which we ultimately were able to implement successfully and sell
Let's
Signature
see.
Bank.
Yes, whoever. Hey,
Previous
Top Line
weekend, 2
Computers.
weekends ago, and
Welcome,
then
welcome,
to
welcome.
sell SVB this past
I
weekend.
see some new people in the chat.
Are you suggesting
Please make
that
sure that you like,
fact that the board had not
subscribe,
approved
share,
the
do all the things,
decision,
you know,
the
hit all the
offer that was on the
buttons,
table
do
was
all
the
that, do all
primary
that cute
reason why you
stuff.
turned down that offer?
It was one of the bids. As a matter of, we were
Oh, I'm
required
in an
for a
incognito
bank
browser.
to make a valid
Okay.
offer for the
Yes.
board of the bank.
To approve
Let's
the
just
offer.
Yeah, as a
peek.
matter
I'm
of
going to turn the
reason why you
volume
did not go
down.
for
That one?
that bid, the other bid did not have that issue.
I don't know if
The
bank,
other
I
bid
don't know what's
was,
going on with the banks, y'all. I don't know. You
more
know,
aggressive in
I don't know.
liquidation.
I don't know.
So you're
I'm just
suggesting
watching. I just think it's a lot of funny business
would
behind the scenes
increase
that we don't
cost,
have a clue
not
about.
decrease the cost.
At
But
that
what
point,
we will do
like
though
this,
is continue
it
to
takes a bit of
educate
time.
ourselves. That's all you
This
can
is
do is be
substantial
educated.
information. It takes some time for a
You
bank
can
to
just
do appropriate
educate
due
yourself.
diligence to evaluate
You
the assets and
can listen to the
liabilities,
news, follow
and
what the
to make
Fed is
an
doing.
informed bid for the
Pick up a
institution.
trading skill.
And
That's
I
all
think
I did, you
as a
guys.
practical matter, that was
So
difficult to
let's
do
get
given
back
the
into
compressed
it. I'm going to turn the
timeframe of
volume
this
down
weekend.
just a
I
second.
think that's
Does
the
anybody
best
have a
set up
question
institution
about
to try
anything
to
you've seen?
put in place
I
a
really do appreciate everyone that is here. Let me tell you, because some of you are new, let me tell you what you are watching. My name is Sandra. The name of my channel is From Lack to Legacy. On this channel, we're all things money, investing, mindset, abundance, and really sharing. What you found is a learning community. I took a class 6 months ago, a trading class, initially because my daughter was trading and she was pretty successful. So I figured, okay, well, I got time on my hands. Let me learn a new skill. And as soon as I got into the class, a light bulb went off. Well, two things happened, really. I'm going to be perfectly honest with y'all. I was lost as the Dickens. I was like, I cannot keep up. And I know it's not me. I was a teacher, career teacher for almost 30 years. I'm like, nah, it's not me. The class was valuable, but the way it was structured did not suit me as a learner. I was totally new, had no background, no vocabulary, knew nothing, didn't know what a platform was. I didn't know what a candlestick was. And when I entered the class, it wasn't catered, it wasn't designed for a new learner like me. I think that class was probably better suited for someone who had at least a rudimentary understanding of trading. I did not. That was not me. And so most of the time I was chasing, trying to make meaning, and that is not ideal. And so what I decided to do was what I wish someone had already done for me. And you know how we do. If we don't see it, we'll make it happen. We make things happen. And so I just opened up my kitchen. I was trading alone, trading in the dark. You all lost as all get out. I still was trying to make meaning. And so I just figured, let me get out here. Let me put it out here on the internet. Let me open up my kitchen because you all are basically sitting in my living room. Let me open it up, and people came. So I am not an expert. I do not give financial advice. I would tell anybody, if somebody leads in by saying, I've only been doing this 6 months and I just learned it on the internet, you do not want, that's not the person you want to take financial advice from. So this isn't that. But what we are a community of like-minded learners. We all are here because either we are trading, if we're somewhere along the trading journey. But most of us are so new. Some of us have never placed a trade. We've never pushed the button. Everybody knows my story. I started in like August. I didn't place a real trade. I'm talking about a paper trade or anything. I was scared to do a paper trade. I didn't want to mess anything up. I didn't want to lose any money. I didn't know. But my son, he talked me into it. He talked me through. He's like, "Mommy, just press the button. Just place the trade." And so I did. And I want to say December, January, February, March, maybe 4 months ago, I placed my first trade. So, you guys, I am not an expert. I've said that from the beginning, but what I am is I'm willing to learn in front of you. I'm willing to learn with you. And by the grace, oh my goodness, real traders come here. Why? I do not know. Out of the kindness of their heart, they come, they give us information for free, they give it to us freely, they correct things. If I say something, they lend themselves, they lend their expertise. They have come into our Wednesday night Zoom sessions and offered up just, that's a community. So what we have here is a learning community. So if you have something to offer, if you have been trading for 20 years and you see something that we're missing, please don't let us just stumble in the dark. That's why I opened it up. I don't mind being vulnerable. Some of that stuff I can tell y'all, this is the truth. Sometimes I look back at some of the things I say and it's cringeworthy because it's like, oh Lord, but I know that I don't know. And when you know you don't know something and you're willing to be vulnerable, I think that's when you learn. That's when the real learning happens because now you can ask questions. So anybody that's here, I want you to ask questions. I don't care how silly it seems. Put it in the chat. You can ask, what's a candlestick? Nobody here is judging anybody. You can say, well, how do I do a watch list? I promise you, I struggled with all of that. I was sitting in a paid class. I watched the girl do it. She did it so fast. I was like, that's not helpful to me. I need you to break it down like you're talking to a 5-year-old because in essence, I really was a 5-year-old. I was a baby trader and I'm still a baby trader. But when I tell you, even as a baby trader, I was able to make money. You can make money doing this, but you must be educated. And once after the education, I will say this too. From my own experience, the channel was an outburst of what I saw when I started. You can have all the skill in the world, but if your mindset is jacked up, you should not be trading with your money. You should not. That's why it's from lack to legacy. And I tell you about mindset because what I found is like my first few trades, I made some money. I was all excited. My next few trades, I lost money. It wasn't a lot, but I kept doing the same thing over and over and over again. I made the same mistake 3 times in a row. And I was like, okay, something's wrong with you. And it's not that, it's your mindset. I had FOMO, which is fear of missing out. I jumped in trades because, I wanted to catch it because it looked like it was taking off. You don't want to do that. Do not chase a trade. Once it has gotten past you, once you have missed the move, let it go. The market is open every day. There are hundreds, thousands of equities, stocks that you can trade, thousands of ways to invest. There will be another opportunity. You don't even have to wait till tomorrow. There'll be another opportunity today. You just have to find it. So I say this, there are 2 things. Yes, you must be educated. I would never tell anybody don't pay for a class. I'm a teacher. I believe in education. But I do know that there's a way to structure learning. And if you want to make the most of your paid class, sit here with us some of the time at least. Come let us talk to you about candlesticks, talk to you about what an SMA is, your indicators, how to place an order. And I promise you, if you learn how to manipulate and maneuver in Thinkorswim, when you go to your paid class, you're gonna be you'll be the star student. You'll be answering questions left and right. You'll be, I didn't have the benefit of that. If I took that class over now today, whole different ball game. It would be so much more meaningful. Teachers understand, professional educators understand. One, you have to meet students where they are. And so if you're a baby trader in here with the rest of us baby traders, bravissimo, you're in the right place. We're going to give it to you and break it down. You can ask any question. Another thing that good teachers know is that you have to build learning. You have to have a vocabulary. People have to understand that language. People have to have a low barrier of entry. You do not want to be trying to fumble around and figure out think or swim in your class. It's a distraction. Ask me how I know. I was totally distracted. While she was teaching, I was trying to figure out where the button was because she didn't break it down and tell me where the button was. I need that kind of teaching, and I hope that I'm offering that to you guys. Hey, Brenda, I want you to know, touch this little button first. Now let the menu come down. You know, it sounds silly, but for years I taught primary school. I taught kindergarten. I wouldn't even go above fifth grade, to be perfectly honest with you, because I like the building blocks. People need the basics. Give me the basics. Then go pay for you a class. I promise you. I would never say don't pay. You need to. You should get a professional because, baby, this is a learning community. This is not a professional class. But what it will do is it will set you up to be successful in your paid classes. Because by the time you get there, you won't be like I was, sitting there scratching your head talking about, wait a minute, how did she do that? Oh, I was miserable. The class, not to say the class wasn't good, it wasn't suited to my skill level. And it was the only thing they had. So I took it. But I would like to go back and retake, maybe not that class, but another class. I want to hear from a different perspective. So welcome everybody. Welcome new learners. We welcome experienced traders. And that's it. I just don't want anybody sitting here thinking, you know, she doesn't know what she's talking about. I told y'all that. I told you. I know what I know. I know how to set up Thinkorswim. That I know. I've been practicing with that thing every day for the last 6 months. So if you are just beginning like I was, and you need help setting up your Thinkorswim platform, because trust me, it's not that intuitive. It's a lot of stuff. You could save yourself some aggravation. I can walk you through. You can schedule a time with me, and we schedule for an hour, but if it takes 2 hours to get you where you need to be, I'm here. Don't worry about it. So if anybody wants to schedule a time to sit with me, we do a one-on-one. I record it. I send you the recording so you can review it. Please email me at fromlacktolegacy@gmail.com, or you can go back through any of the live videos. I think most of them, the older ones, have a link. Check any of those videos. They have a link to my Calendly, or just reach out. You can drop it in the chat. Just get in touch with me, and I will make sure that you get your platform set up, because that can be a hindrance too. You could be knowledgeable in class, but you don't know how to execute on the platform. No bueno. So let's get back into it. Let's look and see if, well, I don't know where we are in terms of profit, but this is a good sign, you guys. Look at that. But look at how it's hanging close to this. What I'm looking for is for it to break through this 50-day moving average. I need that to come on down. I need that candle to break through. I see the RSI is pointing down. That's good. I would love to see some red pop up here on our TTM. We'll see. We'll see. I want to see a candle close below this 50-day moving average. Let's check in on the profit. Okay, so far we're up $20 on these puts. Our puts have made $20, but remember, we lost $24 on those calls, and I'm glad that that thing stopped us out, because so far today we're only down $4.50. And I'm hoping this price continues to go down. We'll see what happens. You can see we got these bright red bars again. And on our MACD, can you guys see this, where these lines are starting to spread apart? That's always a good sign. You see in an upward trend, it's always the same thing here too. Those bright green with the lines spread apart, that's a healthy upward trend. Once it starts, we get that crossover, you know, trend change. So we'll see what happens. We could go back in, and I think I should do this because I'm not sure who joined us, but I'll go back in and place the call orders again. And this time we will adjust our stop so that it isn't so tight. That stopped us out really quickly. I think I put it at like 5%. So maybe this time we'll do an 8% stop and it won't stop us out so quickly. So I will go now and show you guys, if you don't know, how to place an OCO order. But this time, instead of purchasing puts, I'm going to purchase 3 calls. So here we go. We start out here. This is our chart button. You see across the top. I'm going to go over to the trade tab. And let me get rid of that. And I'm going to close it up so you see what it looks like. Okay. I'm over here at the trade tab. When I hit it, the options chain appears. These dates are the dates that the contracts that we want to purchase, this is the date that it expires. And you'll see this number in these parentheses. That's how many days it's left on this contract before it expires. So we bought 3 puts. They don't expire for 9 days. So we really do have some time for those to kind of work themselves out. Let's go out a little further with our calls. We know that the further out we go, the more time, these contracts are going to be more expensive because, now instead of 9 days for your trade to work out, you got 17 days. That's a lot of time. Your trade could certainly work itself out in 17 days. These contracts down here are long-term contracts. This one expires 661 days. That's almost 2 years. These are called leaps, LEAPS, leaps. And I'm not sure exactly. I know it's got something to do with long. I know the L does. But I'll find out and I'll put it on the community tab. If somebody knows in the chat exactly what LEAP stands for, hey, Bumpy. I haven't seen Bumpy in forever. I'm so happy you back. Man, I was about to come and find you, Bumpy. I was coming down south. That Bumpy is my friend from high school. I've known Bumpy since I was 16, 17 years old. So I'm so glad you back, man. Good to see you. All right. So I'm going to go ahead and we're going to purchase a contract with 17 days left. We already know it's going to be a bit more expensive. And we're looking at a put. We purchase a put when we think the price. Wait a minute, we got puts. I'm sorry. I'm going to purchase a call. We purchase a call when we think the price is going up. We already got a put. So we're going to purchase a call. Here's the bid and the ask. This is the price. The ask is what they, the top price they're asking for. The bid is the lowest price. We're looking in between here at the spread. We want a very tight spread. And by that, we don't want a big price difference. You don't want a $2 spread. That's a lot of money in between there. So we want this to be really tight. This is 6 cents difference. This is 6 cents different. The only other thing I'm looking at too is open interest. I want to see, are there other people in there? And right here for this call, we've got 164 people. I just don't like the delta. The delta's low. I like a higher delta. So let's go here with this one. We've got 23. That's a 6 cents different. We're going to buy this one. Everything here I like. I like the low theta. I like the higher delta. I like that there's some open interest here and this is reasonably priced. So I'm going to hit buy and then I'm going to hit buy custom and we're going to do an OCO bracket. That OCO saved us. But this time, instead of setting our stop so tight, I'm going to open that up a little. So we're going to purchase 3 contracts because I want to practice the same way I would practice or really do in real life. In real life, I wouldn't buy 10 contracts. That's a lot of money. In, let me make sure I got this. In practice, you want to practice the way you would in real life. So we would purchase 3. I'm going to also set this number to 3 because we want to sell 3 if we get in trouble. If the price starts to dip too quick, we don't want to be in there. We want to get out. And if our profits start to run up really quickly, we might want to cash out. So that's what I'm going to do. The green line is telling Thinkorswim to purchase 3 contracts. Yep. This top line is where we set our limit. And so I'm going to change it to a percentage, because at 20%, you can set that anything you want, to be honest. 15, you can start taking profit at 10%. You could start taking profit at 30%, 20, whatever. And I'll show you guys that. I got to put it on our thing. So I'm going to say 20%. When we hit 20%, cash us out. Once we get 20% profit, pull the plug on this. I'm going to come down here. This is our stop. This is the most important one. Please don't forget this one. This says, if I start to lose money, pull the plug. Now, we said it because in real life, y'all, I'm not a chicken, but in real life, I'm not playing around with money. So I set the stop pretty tight. I'm going to give it a little more wiggle room this time, y'all. I'm going to say if we're down, let's say 8%. If we get down 8%, then stop us out. That's a little more than double what we did. So maybe around $50, I'm hoping, in that range. We'll see. But at about 8%, stop us out of this trade. We don't want to lose our shirt on these calls. And price is really, price isn't shooting up. It's going down. So, but we will do these practice trades. So I'm going to hit confirm. You need to read this 2 or 3 times to confirm you're getting what you think. So we're buying 3 Southwest contracts that expire April the 14th. They have a strike of $29. This is their calls, and this is what we're paying for them. I think I'm going to edit this because I'm going to edit this because we're going to change that price. Let's see if we can edit this. Edit, and let's offer a little less. Let's take a little off. We don't want to pay top. I'm going to take about 4 cents off. I'll take 3 cents off. I don't want to get too crazy. Confirm and send. And you can see what we're paying for these 3. We're paying $5.79 for 3 contracts. And our potential, you see all of the potential, what you could make is an infinite profit. So send, and we'll just wait for those to get filled. I'm just rolling back through the chart, y'all. Wall Street Trapper. I love Wall Street Trapper. He goes live on Tuesdays on a show called Trapping Tuesdays. I thought I wouldn't connect with the language demo, but he really knows his stuff and makes it easy to understand. Wall Street Trapper is the truth. I appreciated that it's a brother because it says to, other brothers, yeah, this is for us. This is definitely for us. So, yep, you all, there's so many people. We need to, if you all aren't following him, Chris Sane, follow Chris Sane. He's good. Earn Your Leisure. I'm not mad at them. They talk a lot about finance and investing. So definitely jump in there. Bumpy is here. All right, y'all. So I'm waiting for these calls to fill. If it doesn't fill in a few minutes, then I will go back in and alter the order. Maybe the price that we offered was too low, which could be, nobody wants to buy it that low or sell that low. So if they don't get filled in the next few minutes or so, I'll go in and change the price. Oh, got filled. Did you see that, you guys? We offered less and we got it. So I would say to you, like when you're filling your order, and that price that pops up, don't go with that price. Shave a little bit off of there. You don't have to pay the top price. Dee told me that. So I have saved some money doing that. All right. So now we've got 3 calls. We've got 3 puts. Let's get over here and see who's doing what. Okay. So it looks like our puts are doing their thing. These are the puts. Yeah, the puts have made $22, $24, thank goodness, because these calls the calls we just purchased have lost $6, you all. But the puts, which I think those were our originals, they've made $24 this morning. So not bad for just sitting here doing much of nothing. So let's get over to the chart. And so there you go. Maybe it looks like it's going to be a put kind of day, you all. And we can sell those calls anytime we get ready. Because look, you all see how it is trending underneath. It's trading underneath the 9, the 13. Okay. And it's headed toward this. It's under the 50. So y'all, maybe we don't want those calls and we can stop them anytime. Okay. How often do you withdraw your profits? It depends. See, Tim, it just depends. To be honest with you, I have a dollar amount. Some people have a percentage amount, and I've heard pros and cons of both. As a new trader, because it's harder for me to visualize and work with percent, everybody knows a dollar is a dollar. So for me, I have a goal for the day, and it's a minimum goal. If you are here thinking, this is not the class or this is not the community, if you're trying to make $1 million in a day, I personally am retired. And for me, $100 a day means if I traded 3 days a week, that's $300 a week. That's $1,200 a month. That I could buy a lot of lunches. Me and the ladies can sit by the pool a whole lot of days with $1,200 a month. That's $12,000. That's like $15,000 additional a year. That's just if you make just $100 a day. You can make so much more. So I usually, once I make $100, I don't care what the percent is, I'm getting out of there. At $100, I'm getting out of there. It says, how often do you withdraw your profits? I take my profits generally at $100. I'm shaving something off the top. I also do something, is that C-Tim's question? C-Tim, I move my money too. In my real account, once I've accumulated so much in profit, I move that out of my investing account. I move that over into my living account where I'm actually using those profits to purchase real life things. And I also move that money over to another account that I have set aside for long-term investing. You guys, what trading options can be a part of your long-term investment strategy. You know what I mean by long-term. That's where you buy Apple or you buy QQQ or SPY, and you in it to win it. You're not trading that thing every day. You park that money over there, win, lose, or draw, because you know in the long run, the market's going to go up. If you leave, you're talking about 10 years, 5 years, those are long holds. So I have two strategies with the money. When I make money on an options trade, I do two things. I hold it in that account long enough, and I can tell y'all my thing is $1,200. Once I get $1,200, I take that money, I split it up. 600 is for me to toss up in the air, and I shake and shimmy under it. Me and the girls, we have cocktails or whatever it is we're gonna do. We go, but whatever. It's play money for me or living money. And then the rest goes into an account where I'm holding. So when I get ready to purchase long holds, that's what I do. Okay, it's another question. I don't see it. What was the previous question, C-Tim? I only saw the question about profits. C-Tim, did you have another question? I want to make sure that I get to all your questions. I'm just scrolling back. I saw your question about what you do, how do you take profits, but I don't see the other question. Oh, I see. Do you know why the word weekly is on the options chain when there is 9 days until expiration? Those are called weeklies. let me see if I can explain this. And if I can't, I'll try to steer you to the answer. Because I think at one time, or some expire daily, weekly, and monthly. And I want to say that they expire on a particular day. I don't know. That's a good question. I'm glad you asked that because the truth is, I'm not sure why they call it a weekly. And I've heard it. I know I've heard it somewhere. I'm not sure about that. But I do know that there are contracts that expire daily, weekly, monthlies. That's a good question. I'll make a note and I'll see if I can't post that for you. Or if you know who would know, Johnny. Living My Dream would know. Miss Vice might know. If any of those guys pop back in the chat, we'll ask that question again. Why are they called weekly when they can expire just about any time? I want to say it's some leftover language, you guys, because at one time you didn't have daily expirations. This I know for a fact. At one time they only, they expired on Fridays. I know. You guys, could you all help us out? Everybody has a screen name and for different reasons. If your screen name is for security, I understand. But so that I can address you properly, some people I know their names. Can you give me your real name so that I can, address you properly? Marilyn is my right hand. I'm telling y'all. Everybody need a Marilyn in your life. So C Tim and who was the other person? I think it was it Dorstu or Door? I think it says Dorstu. Could you all drop your real name in the chat? And then that way, oh, Doreen. Yeah. Okay. Doreen, I'll do my best to answer that question. That's the one thing. I'm not sure why they call it a weekly, but I do believe. Okay, thank you. And make sure I'm pronouncing this right. Is it Kinesia? Kinesia. Forgive me if I mispronounce it. I'm a stickler for that. As a teacher, I ran across tons of names, and it's important that you address people by their name. I think it's just respectful. Kinesia. Kinesia. Thank you for the phonetic spelling. Oh my gosh. Kinesia. That's a beautiful name, Kinesia. My name is Sandra, and I don't put up too much of a fuss, but Lord knows I've been called everything. Sandra, Sandria, the whole shebangity boodle. Yeah, but that's important to me that I address you properly. So thank you, Kinesia, and thank you, Doreen. I know. Me too. I was Sandra, Sandria, Sandy. My mama didn't name me any of that stuff. She named me Sandra, and it's not that hard. So but as I got older, I just, I answered to it all at this point. But as a child, it was, that's not my name. Who are you talking to? I'm not Sandy. I'm Sandra. But thank you guys for your questions. Please keep them coming. If I don't know, I know. I got called, girl, no, I got called Sandria, and she was serious. I was like, that's not my name. My name is Sandra. Okay, so we have our chart here, you guys. Let's peek in again. We've got calls, we've got puts. So we're up $15 for the day. And the way we're up $15 is let me see. Our puts are up $18 and we lost $1.50 on our calls. This is what I would say. As we start to watch during the day, if we see a definite trend that this trend is dead set on a downtrend, we can sell those calls because we don't want to just lose money. And I'm going to tell you this, if this chart keeps developing the way it's developing, and here's what I see. You see how we're underneath the 9, the 20, and now we're underneath. Well, now we're kind of caught up in them. I'm just going to keep watching because so far we aren't out of too much money. We're down $9, and I'm okay with that for the day, for the potential of what we can make. So we're down $9. It looks like these are our calls at the bottom. The ones we just purchased, they've lost $3, and our puts are up $18. I promise you, I like trading love. Love is new to me. Marilyn introduced us to love. I like love because one, the ticker moves slow. Y'all know I like a slow ticker for teaching. But you can make some money. We made good money on some previous love trades. I also like it because the contracts are so reasonable and affordable. We paid $166 for one contract of love. We could have gotten them for even less because you can, again, play with the price. You don't have to pay that top ask price. You can go in there and adjust that price. So I like love for teaching. Love is Southwest. I like Ford for teaching. If you guys want, we can look at some Ford contracts just so that I can show you how reasonably priced they are. There's some other things I want to go over too with you guys, and hopefully we'll have time because I would like to go over how to place your support and resistance lines because you should do that. Again, we're practicing. So what you should take away today, you should be able to go back and look at this in the replay. You can look at how do I construct an OCO order? You can look at how you can adjust the price. So that is a takeaway that if you caught it today or if you want to go back in the replay, you could slow it down and look at that. But I also, before you do any of this, these are practice trades. Before you do that, it is good practice to plot your support and resistance. You should know where price is going to run into trouble, the high, the low. You should know those things. And I'll show you how to do those. If you guys don't mind, we can put these on, ready, set, go, and let them do what they're going to do. We can go back over to the chart. And do I want these to show? Yeah, we'll let them show. I'm going to go to the daily chart because, Francis, you want to do Ford? Okay, then let's do Ford because I won't have this in the way. So we'll leave love, y'all. We're just going to let love do whatever it has to do today. She'll be cooking over here. Either those, somebody will be ahead, the calls or the puts or whatever. We'll come back and look at that money. So let's go to Ford. The ticker for Ford is F, just F. And I'm going to do the same thing I always do. I'm going to start looking at Ford and I'm going way back. I'm just going to do like a history of Ford. I'm going to look at Ford over the years. So I'm starting way back. This is Ford by year, you guys. We're going all the way back. What you see now is 1985. And we're going to go all the way from 1985. We're just looking at what price has done with this stock since 1985. So now in 1985, Ford was trading for about $5 a share. And at the height in 1999, Ford got up to $38.83. That was in 1999 or around 2000. And you can see down, poor Ford, price got as low as $1.01 a share. That was in 2000. It looks like 10. I want to tell you right here. Let me hover over it. Let's see. I saw the date pop up. Okay. This was 2009. Wow. In 2009, Ford traded at $1.01 a share. That's bad. I'm sorry. From $38 all the way down to $1. Whew, I'd have been salty if I was a stockholder. Price went up. And so let's look at here. 2021, we saw a significant price increase. Ford went from like $9, $8 up to $20 a share. And then the following year, you see exactly it tanked. It went back down to like $12. And you can see that's where we've been. Currently, Ford is trading at about $11. Oh, exactly, $11.55. So from the height of $38 down to a low of $1 to $11.55. So that's just the history. We just want to know. So I would say, starting from last year, That was 2022. Ford traded at a high of 25 down to 11. That's a significant downtrend. Just looking a little down, little down. So now I'm going to pull in. Let's look at Ford on a monthly basis. Like, what has it been doing over the last few months? So I'm on a monthly. 1 month. That's the minute, weeks. Okay, months. Now we're going to look at Ford over 20 years by month. And here it is. Every last one of these candles represents a month. And so look at 2020. Ooh, Ford had a great 2020. Here was Ford. We could start here in October. Let's go here. In 2020, price just started going up. 2021, it was at $15. By October of 2022, Ford was trading at almost $26. And then after that, look, down, 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 down. So I think it's safe to say from October 2022 to the present, and you can see it. Y'all look at the lemon squeeze telling on it. You see these blue bars diminishing, prices going down. You see these red bars, that's price decrease. Look at our RSI. Price was here. It was practically overbought and price just tank. And so now we're down, our RSI is down near 44. You can see the same thing here. Price increased and then we had this crossover and price has been going down steadily. And here we are today at 1155. Yeah. So that's a clear downtrend. I mean, anybody could see that. This is just 2023. It's not even October of 2023. So from October 2022 to today, price has been on a steady decrease. Now let's look at it over the week. And you notice I'm just pulling the time frame in. We looked at the year. We looked at it every year. We looked at it every month. Now we're going to look at it on the weekly. Because all I'm doing now, I'm not doing anything. I'm just looking. I just want to see. Because I want to know, should I be buying calls or puts? In an up market, you want to buy calls. In a down market, you want to buy puts. That's the beauty of trading options as opposed to stock. When you buy stock, you only make money if the stock goes up. When you purchase options, you can make money even if the stock tanks. So if you own a particular stock, like I own Target, everybody knows this, and Target has gone up and down, it's in the dumps. Many times I'll just go purchase an options contract if the price is going down and I'm losing money. I'll go snatch up a couple options contracts because the price is already going down and make up that loss. So that's why options can be short term where you are trading daily and making money like I do and slide it to the side to live with or invest. Or you can use it to offset some of the losses in your portfolio. So options, if you do them correctly, if you learn, if you are disciplined, you can use options to shore up maybe some weaker investments. You can also use them to generate income. So here I'm looking at the weekly, and you can see from 2022 price, look, all that red means price is going down. So this time we had a couple good weeks in here, price was going up. I'll make it bigger so you guys can see, but you can see a big decrease. I'm willing to bet, was that around pandemic time? And then prices down. We had a couple good weeks in there, price stabilized, down some more, couple up weeks, down. And it looks like, we are now currently trading underneath. Yeah, we're underneath all of the averages. We have a 50-day moving average, our 9, our 13, and our 200. And let me blow this up because we just want to look at the last few weeks. What has Ford been doing over the last few weeks? And here we are. So this is however many, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. Let's say the last 3 months. And price, you can see up a little. It's not a drastic change, but it is going down. What is significant for me, is that it is underneath all of these moving averages. So price is trading lower than it has in the last 200 days, which that makes sense. And it's under the 9, the 20 and the 50. So that you can see, I mean, just physically look at the downtrend. Price is going down. So it would make sense that, especially if we were going to hold a contract for a week or a month or so, that it would make sense that price would continue to go down. But we don't want to guess. We look at our chart. Look at the MACD. You see these red bars? They're nice and bright. And they look, we can even look at the measure. That was 0.59, 0.7. This one is 0.8. So they're getting bigger. Look at the space between these two. It's getting wider. We had our little crossover here, which signifies this is a downtrend. Our RSI is under 50. These are all good things. Our TTM squeeze, we had these red bars, they were building, and then we got this yellow. That makes sense too. Look, price might be going down, but for here, it went up a little. So you're watching all of that stuff. Let's look at our daily chart. Remember, we haven't done anything. We're just trying to figure out, what has this thing done? What do we think it's going to do? Now I'm going to look at it on a daily basis. This is the one I really prefer to look at, since we're trading short term. We're not trading and holding long leaps and all that stuff. We're probably scalping, day trading, and maybe swinging for less than 2 weeks. So the daily chart is the one that is most significant to how I'm going to be trading. So we can look at this. Every one of these candlesticks represents one day. And here's what's been happening. Look. So starting on the 6th, down, down, down. We had an up day, down, down, up, So this is noteworthy, because now price has crossed above the 9-day moving average. So it was trading clearly below all of those, but now it's a little bit above. So you can see too, we see that downward trend. Trend is waning. Looks like we're poised for a crossover. Price may be getting ready to turn up. All of this makes sense. Look at your RSI. It was almost oversold and it bounced up, but it's still under 40. And for me, when it's under 40, that is, that signifies that we're in bearish territory, that we really are in a downward trend when that RSI is under 40 like that. But for us to place a put, you would want to see it continue to go down. So I am a little concerned about a put for short term, particularly today, because look at this little crossover here. So no need. Let's look at it on the hourly. So you see, we went from looking at Ford over the years. We looked at it by month. We looked at it by week. We looked at it by day. Now I'm going to look at it on the hour. I want to know, what has Ford been doing hour by hour over the last 20 days? And again, you can see we went from $13. This is clearly a downtrend, to a low of $11.11. And in the days since that low, we've gone up to $11.56. So let's make it big enough so we can see. And let's kind of decide what we want to do with Ford today based on what the chart says. I posted RSI, its relative strength index. And here's our RSI. It's an indicator that tells us if a stock is overbought or oversold. You want to know if a stock is overbought or oversold, because that will help you decide if you want to buy a call or a put. Because down here, I hope you can see this. This is a value of 30. If this stock price gets way down here, it's not going to stay down there long, because when stocks get that cheap, guess what? People want to buy them. Of course, that's what we're all waiting for. We buy our long holds. We want Apple to tank. We want to buy Apple low for particularly a long hold. So you look at your RSI, because it can help you decide, whoa, it's down here. you know what's going to happen? Price is going to go up. Why is price going to go up? Because this stock was so cheap that people, well, so inexpensive that people said, whoa, it's time to buy. And what happens when a whole bunch of buyers come in? The price goes up. You also want to look at your RSI when price is up here. This is overbought. That means people have bought so much of it, they shot the price up. Well, guess what? All these people that bought, you know what they're going to do? They bought it low. They're going to sell it. So guess what's going to happen? Price is going to come down. So your RSI is a good indicator to have because it can help you decide if you want to purchase a call or if you want to purchase a put. Is it time to get out? Is it time to buy? Is it time to sell? I'm always noticing because once it gets down here, it can stay down there, but it doesn't stay forever. The price is going to go up because trust me, if Apple ever dips down to my buy price, oh, I'm going to buy it. And then everybody's thinking the same thing. Oh, Apple's on sale. Then everybody rushes in to buy, the price goes up. And investors like us, daily investors, as soon as that price shoots up, we're going to do it. We're going to cash out. A lot of people start to sell, price goes down. So your RSI is your relative strength index. Please check the community tab. I have a link there and an explanation. If you want, I can go over. We might as well. We ain't got nothing else to do. Hold tight. I'll go over and see if I can't show that to you. Hold on one second. I'll show you where it is. Let me go over to the community tab. And we can even go over this together. Let me pull up RSI. Okay, let me bring this tab into the stream. Okay, hold on. I'm going to take our chart out. We're going to do a little side step and go over what RSI is. So hold tight, you guys. Let me move this. I just got to move a few things around. And I'm going to share the community tab. Yes. Okay. I hope you guys, let me see if you can see that. Okay. I'm waiting to see if you guys can see this tab. Yes, there it is. So, Miss B, if you go over to the community tab on my page, you'll see this. It says, why use the RSI? Here is a link that will link you to this article. But really quickly, the RSI is Relative Strength Index, a technical indicator used in momentum trading. That's what we do. We do trend trading. I don't do a bunch of strategies. I'm looking for a downtrend or uptrend. I'm looking to ride that trend. I'm trying to get in and get out. It's for momentum trading that measures the speed of a security's recent change in price. And that's what we want. We want price shooting up or shooting down. Here's some key things why you would want to use your RSI. The Relative Strength Index is a popular momentum oscillator. It's been around since 1978. The RSI provides technical traders with signals about bullish. Bullish means prices going up. Those are our green candles. And bearish price momentum, price going down. And it is often plotted beneath the graph of an asset's price. You all see that. I keep it right on the bottom of the chart. An asset or an equity, that's what we're trading. That could be Ford, Tesla, whatever you're trading. It's called an asset, or you may hear someone refer to it as an equity, is usually considered overbought when the RSI is above 70. Yeah, that means all those people went in and purchased it and they shot the price up. And it's considered oversold when it is below 30. And we talked about that. Once price gets up there, everybody is selling at a profit. We do that. We buy low and we sell when the price gets high. So once it's up at 70, people are going to start selling. And what's going to happen? The price is going to come down. The RSI works best in trading ranges rather than trending markets. So yeah, we want to make sure, just do me a favor. Tap this button. It's going to take you to invest Investopedia. Let me see if you can see that. I hope that gives you this. Did it pop up? You should be able to read this entire article. I hope it pops up. Will you see it? Or do I have to open up another window? I think I have to open up another window for you guys to see this. So hold on. Let's see. I'm surprised it didn't show you the entire article. At any rate, if you hit that link, it will take you to the article that explains everything. And you know, I don't like that. I'm getting ready to figure out how to show it to you. So let's see. Let me get over here. And I have to open up another screen. So hold tight. Present. Share screen. And I want to show you, there it is, the article that you will be able to get linked to. And this is on the website Investopedia. Please do yourself a favor, bookmark Investopedia. They have everything there. So here's the article that I linked for you. It says, learn how to measure the magnitude of price changes in 11 minutes. That's all. It takes even less than that, to be honest with you. What is relative strength index? So everything that you need to know about relative, they even tell you how to calculate it. I don't need to know all of that, y'all, because that's like how to make the sausage. I just need to know that the sausage is good, is healthy. But if you want to know how they calculate RSI, you can come here to this tab on my in the community tab on my website. Y'all know what I'm talking about. On the YouTube channel. Practice trading with virtual money. Yes, I do. Why is RSI important? Using RSI with trends, modified RSI to fit trend levels. I never modify it. I leave it. It's 30 and 70. I leave it. But all of that is there for you. It tells you about what's overbought. It tells you about what's oversold. Yes, Investopedia is absolutely free. If you're trading or investing, you gotta have that site in your toolkit. So let's get back over to Ford. I hope that little sidebar didn't throw you or throw anybody. Let me get back to our chart. Okay. And we're back looking at Ford. And so we need to decide, and I'll let you guys decide. I want somebody in the community, somebody in the community tell me what you want to do with Ford. I don't know if Francis is still here or not, but do you want to buy, oh, Miss B, anytime. Do you want to buy a call or a put? And I'll just walk you through what I see, and you guys, whatever you say is what we will do. So we know overall that, and I'm gonna go back to the daily chart. It looks like these, look at these days, it's not hard to see. It looks like it was a downtrend. Clearly price was way up here, 1313. We're down to 1150. We got down to 1123. And right now we're trading at 1156. So here we're poised for a little crossover, but it hasn't crossed over yet. Our RSI is under 40, and we know that that's bearish. And these are, look, these are still relatively red. Personally, I say if we were holding this for a week or better, maybe we're still in this downward trend because we're clearly trading underneath these. This was the average price for 200 days. We're clearly underneath that. It was $13. We're underneath the 50-day average. That was trading at about $12.50. We're under the 20-day average. That was $12. But we're crossing over that 9-day. But overall, you guys, I think it's going to continue to go down. But let's go look at it on the hourly. And I'll let you guys decide if we buy calls or puts. Maybe we buy them both. Okay, so here's what's happening today. So today, the RSI right now is a little bit above 50 and it's pointing up. You all look, this is the downward trend is no. Now we're going into an upward trend. Look at that. So we're trading above all of these too. I don't know, y'all. I would probably buy a call. I think we'll do some calls and puts, but personally, yeah, I'm going to go for calls. And I just want you to see how inexpensive these forward contracts are. So remember, when we get ready to purchase, and you guys, let me say this, here's what's missing from this. Today's activity, we're just talking about how we look over time frames. We are talking about how you place an order, how you place an OCC. I wouldn't do this for real with real money if I didn't have my support and resistance plotted. Because you really want to know, where is price going to get tripped up? But we've looked at it. It's enough for us today. We'll do another day where we do support and resistance and trend lines, because that is important in your decision making. But this price has been pretty, let's see, 1126 to 1170. We're basically trading in this very tight range. So I'm going to go over here to the trade tab, and you'll see here's the options chain. We have 3 days, 9 days, 17 days, 24 days. And of course, the further out we go, the more expensive they're going to be. So I'm going to go with the 9 day, because I want you to see that you could actually be trading forward and you wouldn't be risking a lot of money. I said I'm going to go with a put. Ford is currently trading at 1157. So these strike prices, this is 12. We're saying we're going to purchase a put because we think the price is going to stay under $12. I really do think the price is going to stay, but I'm going to go up a little. Let's see. There's a 2 penny difference here. That's a nice delta and a very low theta, and it's a lot of people here too. Okay, let's do this. This is good enough. Or we could do this one, but this one's twice as much. See, this is 94 cents as opposed to 53 cents. And just so you guys know, I'm not sure who's new and how new. This says 53 cents, but actually this contract is $53, because when you purchase an options contract, one contract gives you control over 100 shares. So the price here is per share, but we know we're purchasing 100. Contracts come bundled in a lot of 100. So one contract gives you control over 100 shares. So we would just multiply this by 100. So the most we would pay is $55 or $53. And I'm going to ask for a little discount in there. These contracts, if we purchase these would be $94 a piece, or somewhere between $97, but they're all under $100. So let's go with this one, because look at the delta is how we get paid. That's a much higher delta. It's not double though. Okay, I'm going to go with this one. And I want to do a custom order. So let me pull that out. Oh, are you kidding me, Ms. B? No, please feel free to join us in our Wednesday. This Wednesday, we have a class. And when I tell you new traders, I mean new traders. I'm a new trader. All I'm doing is sharing with you what I know. And I say this, don't take my word, please. Anybody who tells you, I mean this, they've only been doing something for 6 months on the internet, please check behind them. Please go seek out professional advice. My way around this platform. I understand how to get around Thinkorswim, but I am not a trading expert. I know how to place a trade. I know how to get in. I know how to get out. All of that stuff for, what's the best strategy? And girl, that's not me. I'm learning with you, but I just want people to feel safe. And so I'm glad. I hope you're getting something from this, and I hope you feel safe asking questions. So if you can, join us on Wednesday. The only thing you need to do is email me at fromlacktolegacy@gmail.com. I'll send you the link, and I need you to make sure that you're subscribed. I need your first name and last name. So no need. You are with your friends. So we're going to go ahead and purchase these forward contracts, and we're going to get the cheapest, not cheapest, y'all, because there's some that are less expensive than this, but I'm going to purchase right here. We call this at the money, and I can go in all of that later, but I'm going to buy it, and I'm going to hit, oh, fudge sickles. I want to do the OCO order too. You all know that. So there we go. I'm going to buy custom, and by custom, that means I'm going to set this order up so that I tell Thinkorswim when to take my profits and when to sell me out of this joker if it doesn't go my way, because we don't have money to just be tossing around. So because the forward contracts are so inexpensive, you know, we can buy a few. So let's go ahead. I would normally buy 3. Let's go ahead and buy, let's do 3. We'll stick with our 3, our number 3. Whoops. And I'm setting all of these to 3. And I'll tell you what I'm doing. And if you can't catch it now, replay this. Play it over and over again. Slow it down. Stop it. That's what I do. Okay. So the green line is the buy. The 2 red lines tell Thinkorswim when to sell. So we're buying 3 contracts, 3 forward contracts with an expiration date of April the 6th. And we've got a strike price of 12. It's a put because we think the price is going to continue to go down, and that's good. These here, this first red line here, I'm going to hit this little lock and unlock it. And if you notice, this pops up. So I'm going to change this to percent, because after 20% profit, please sell. If we make 20% on this investment, you have beat the market. The market, and by the market, I mean the stock market in general, in a year may average anywhere between 8 and say 14%. And I'm being very generous on both ends. So if you make a 20% profit, you have beat the market, and that's a good thing. So this first one says, hey, if this stock goes up and I make 20% on my investment, cash me out. I'm good. I'm not going to be greedy. I'm going to take the 20% profit and I'm out. This second line is our stop. This is the most important one to me. So I'm going to hit this little toggle here. It unlocks this. I'm going to move it to percent. And what I'm saying is, this is me. I don't like to lose money. If the trade doesn't go my way, you know, relatively quickly, I made a mistake. Get me out of there. So I'm going to set it. We set it kind of tight the first time. I'll set it at 6%. Okay, we'll set it at 8%. If we get down 8%, I'm telling Thinkorswim, don't ask me any questions. Sell it. Sell, sell, sell. And you'll see why that comes in handy, because you could walk away and something could happen. And you don't want your money out here in the street doing whatever it wants to do. So we have given this order parameters. I'm going to buy 3 forward puts, expecting that this price is going to go down. And we have till April 6th for it to work itself out. If the price doesn't go down below 11.55 by April 6th, you know, our thesis was wrong. That's the worst thing in the world. That's the worst thing that can happen, is your thesis is wrong. But in case our thesis is wrong, we put that stop in because we don't want to be too wrong. We won't risk all of our money. And so once I hit this confirm and send, we can read over this order, and you can see that we've only invested $168. Let me go back, because I'm going to alter it. I'm going to say, hey, we don't even want to pay you top dollar like that. Let's edit it. And instead of offering them 56 cents, let's offer a little less. Let's say, no, we want to give you 55 cents. And let's look at the price of these. So now we're not paying $168, we're paying $165. So you do have some control over the price. So I'm going to go ahead, send, and we're waiting for this order to fill. And you'll know that it's filled because you'll get a little blue message up here in the corner. Now, it might not fill, but I went right here in the middle You see the bid and the ask was 54 and 56. Well, I offered them right up the middle. I offered 55 and they accepted it. You could have paid them 168, but why? We could try, and we paid a little less. So I went right in between these two and they accepted that bid. Okay, so now we just purchased 3 Ford puts, hoping, not even hoping, y'all, based on what we saw, we're expecting this price to go down below $11.56, and we have 9 days for that to become true. So we're not even in a hurry. If it makes some money today, oh, hey, living my dream, then we will cash that out. But you guys can decide, like when we want to take our profits or not. So let's look and see what Ford is doing. I will say this. Ford is one of the slowest tickers in the market. If you think it's not the ticker that you trade if you're trying to make big money, fast money. I like to use Ford because it ticks. I mean, the price changes so slowly. You can actually look and see Ford just went up 1 penny. We don't want it to go up. Remember, we bought a put. We want the price to go down. But what you can do is look at how price is affected by just a penny or 2 pennies or what happens. So here's our Ford. And so far, nothing has happened because the price really hasn't done much fluctuating. So I like Ford because you can talk about it. It's a slow ticker. It doesn't move fast. You're not going to lose a lot of money. I think our initial investment was $165. You can't really hurt yourself. You don't want, even in paper trading, I like to be reasonable and sensible and, I think it's an easier way to learn. Tesla moves so very fast. I don't recommend it for teaching or learning because it moves so fast. I guess if you were talking about momentum trading or something like that, that might be good. But Ford is good because it's stable. The contracts are inexpensive and they don't move too quickly. We could go back and check on our love and see what happened with that price. So you can see this is what Ford looks like. We have our stops in place and we're just going to let it sit. And our thesis is that over at least the next 9 days, the price will go below $11. And we bought in at $11.56. So we're wanting to see. But did you all see the price ticked up a penny? We could check and see if anything happened. It went up a penny and that cost $6. You all see that? So you could reasonably assume that if it goes up 5 cents, it's going to go up more than $6. That might be somewhere between $6 and $20 or $30. So you can see how price affects. That's why I like this. You can see if a penny moves or 2 pennies move. There's something else though I want to add to this screen that we're watching. I want to put in the percentage. Some really smart trader told me that. Percent change. I like that. I want to know what the percent change is. And what do I not have to see? I don't know. I'll leave it as it is, but I do like to have the percent change because that tells you if you're up 1% or if you're down 1%. So it looks like on Love, we have earned 1.08% today on our Love trade. We're up $10 for today. Yep. On this one, on these 3, what are these? These are our puts. We bought 3 puts. I'm trying to get it to, yeah. Oh no, those are calls. We bought 3 calls and we're up $10. Give me 1 second, you guys. I need to get some tissue. So I'm going to take you back to the chart. That's Ford. I'll take you back to our Love chart since we got some money going on over there. And I'm going to take myself out of here. And I'll turn the news up for you guys.
Sending shares up nearly 12% today.
I need some
It's also
paper
one that
towel.
I'm hearing was Beijing driven. Remember that BABA shares have been crushed in recent years by the Communist Party's anti-monopoly measures. And Jack Ma has been a persona non grata. This restructuring addresses that exactly by decentralizing power at the company. And it actually coincides with Jack Ma's return after more than a year. There are going to be 6 units, Taobao, Tmall, that is the domestic e-commerce platforms. There's Cainiao Logistics, digital media, and cloud. This is the unit that is seen as a major growth opportunity, which current CEO Daniel Zhang will head up. Now, Morgan Stanley says, big picture, this is a big deal catalyst to unlock value and eliminate the holdco discount. Sees a bull case of $530 billion for the whole thing. There are other signs, though, guys, of a business, so we'll call it a charm offensive from Beijing. Apple CEO Tim Cook was there meeting with the commerce minister this week on the reopening and broader supply chain issues. And there was also a meeting with the CEO of ASML. Beijing sought to reassure them, saying that China remains a reliable partner. Politically, of course, U.S.-China relations are on a very different page, and that is increasingly affecting business relationships through things like the chips export ban, but there's still a good deal of collaboration. Sarah, you were just talking about this in your interview with the Tapestry CEO, and Beijing is hoping that it'll ramp up, not cool even further.
Well, that's how, it's funny. We were all watching the TikTok CEO on Capitol Hill last week, and people were saying, it's a joke if you're wondering whether the Chinese government has a role and is in charge, because look at Jack Ma. I mean, one of the greatest and most famous entrepreneurs of China. And turns out he wasn't in charge either.
Yeah, that's why I said, after years of looking very unfriendly to business, this is kind of a 360 or 180, whatever it is, by Beijing. And remember, too, I keep going back, they can take golden shares, and they have taken golden shares in companies like Alibaba and Tencent. That gives the government direct power to do things like veto and other things. So absolutely, Beijing is in control.
Yeah. Right. I think it applies to TikTok as well as the thing.
Yeah, it's been remarkable to see their movement on geopolitics with Russia, the Saudis, and of course now this business push. Overall, a relatively stable day. VIX almost a teenager here, just hovering right above 20. Let's get over to the judge, post 9.5.
Carl, thank you very much. Welcome to the Halftime Report. I'm Scott Wapner, front and center this hour. Buy it or fade it. We are talking about the tech run. Been nothing short of stunning this month, but has it run out of steam? The investment committee debating that now critical question. Joining me for the hour, Josh Brown, Liz Young, right here at Post 9, along with Jim Leventhal. Let's take you to the market, show you what is going on today. NASDAQ has been in the red today, as tech has been a loser, comm services as well. The Dow still holding on to a gain, as you see, of near 87 points. But Liz, you look at this amazing tech run. FANG index, by the way, is up 30% quarter to date. Okay, tech, the second best quarter this month, this year. You think, though, it is a fade at this point?
At this point, yeah. I mean, the Qs are up 15% on the year. I don't think we're going to have 15% quarters for the rest of 2023. So if you entered that trade at the end of last year, or maybe around that October low, if you were lucky enough to do it that way, I think this is an okay time to start fading it and take that beta off the table. I think a lot of investors have rotated during this first quarter of the year back into big tech, and perhaps rightfully so, as rates came down.
Well, it's like rates come down, regionals are worrisome.
Correct.
The economy's worrisome, so cyclicals haven't been the place to be. All of that money has been rotating. The question is it going to rotate out?
I think the interesting part is that it's rotating inside the equity market still, and it hasn't necessarily all come out of the equity market. That probably is next if there is a recession confirmed, and if what Gunlock talked about yesterday comes to fruition, which it would come in the next 3 to 4 months or so, then you would expect money to rotate out of the equity market, in which case this is a great opportunity to take some gains in tech. I'm not saying sell out of it entirely. Look, some of those names, if you're holding them in a long-term portfolio, if this is your retirement portfolio, absolutely keep some of it. But if you've become overweight tech in this big run, take some gains.
So, Josh, tech's forward PE, and this is courtesy of Liz Ann Saunders from yesterday on Twitter. It's up 30% since October. And Bank of America says the money's still going there. Biggest week of inflows since October into tech, seen buying every week but one year to date. So what do you make of this? Answer the critical question, which really is, do you continue to buy into it or do you just start to fade it?
Well, I don't know that you want to fade it, but I also don't know that you necessarily have to be a buyer. I think most investors have large cap technology and or communications and or discretionary tech names like Amazon in their portfolios already. So I think for most people, they're not sitting there without these stocks. And the real question is, do I let them run? I think the answer is yes. And I would point this out to people. We go through this exercise with clients when it's getting toward the end of the year. We're allocated for the next year. Not that the calendar is that important, but this exercise is, you look at the quilt, the 11 sectors in the S&P, what did the best in 2022? What did the worst? There's always that hesitation. Why would we want to be in these worst sectors going into the new year? Well, tell me what the story is. Why is everyone selling them? Why doesn't anyone want to own them? The story is very well known. Every investor, retail, professional, they can reel off, oh, you don't want to own tech because of A, B, C, D. Okay, great. You watch a lot of television. Congratulations. Look at the performance this year. It is literally the reverse bizarro image of the first 3 months of last year. Through March 27th, the three worst performing sectors year to date, energy down 13, financials down 12, utilities down 10. The top two, communications and tech, both up 13. Literally the reverse, the performance this year. And so just understanding that what goes around comes around. And eventually, most things find a way to come back. A lot of people give up on them before they do. So let me just give a little bit more color to that PE ratio. And then we'll get Jim in the mix because I know he's losing his mind right now. The median PE for the XLK, that's just tech, is 27 times. The median forward PE for the XLK is 21 times. I want you to contrast that with January of 2022. The median PE was 35 and the median forward was 26. So yes, we've had PE expansion for tech since the lows in October, but let's not cherry pick that one specific date. If you go back to early 22, tech was much more expensive than it is now, both on trailing and on forward. And the fact that they trade at a premium to the overall S&P should not be the thing that has you fading or selling, because guess what? They always do.
It's a good point. One that, Lori Calvasina, Jim seems to share. Tech sector valuations have room to run, is what she says. Look, if you're worried about growth, you're going to go where the growth is. You're going to go where the money is. If you're, worried about companies, their balance sheets, at least in some sectors, you got a lot of cash flow within technology. It's not a, rocket science as to why money has flowed here, but it is, to Josh's point, the great offsides trade, if you want to call it that, because hardly anybody came into this year thinking that tech was going to have the early run that it's had in the first 3 months.
Yeah. I think you nailed it when you said if you're worried about growth, and then a whole lot follows from that. Meaning if you're worried about growth, the playbook from the last decade, which may well apply here, is the only place you're going to get growth in earnings in a growth slowdown or a recession is tech. And then also consider that if
mega tech.
Okay. Then also consider if you're going into a recession, it's likely that rates come down. And what happens to multiples when rates come down? They go up. So the comment that Josh was making about multiples is exactly apropos. To me, what this comes down to then is for the investor trying to decide whether to fade it or trade it, you need to ask yourself what you think the chances are of a recession. If you think there's a recession, then yes, this is the place to be. If you think, as I do, that although the chances of a recession have gone up, there still is the base case that supply chain onshoring and infrastructure spending will favor cyclical earnings going forward, then you'd rather be in those cyclical sectors. That's where I am.
So you're not moved at very much, it doesn't sound, by the recent events.
I am moved.
You are
moved. So, I mean, let's be clear,
because I don't think you're being clear.
This. Well,
because let me tell you something. I hear you on the big picture of onshoring and infrastructure spending. That's not going to buy you a ham sandwich in the next 12 months, given everything that's going on.
Correct. So I think I've said this a few times, but with particularly what the Fed did last week.
Oh, y'all, I had to get some juice. I was fading fast.
The base case. But
I'm back.
And the only thing I can say about
I had to get a little orange juice. I got my coffee.
Care about the dovish stance, okay?
But it's 10 o'clock my time. So 7:30, 8:30, 9:30, 10:30. I'll be done by 11 today. So we have a little less than an hour left together. In this last hour, if there's something that you want me to cover or a question, if I missed anything, let me know. I'll go over it. I'm just looking at love, which is Southwest. Let me see. And from this morning, it's gone up 40 cents. Oh, Lord, I don't want that. I need it to go down. So I'm going to, oh, wow. We can look at this seriously. This is a good one. Look at this. This would have been a nice little morning investment for somebody. Straight up. That's hour by hour. Let me look at it on the 15-minute. How's that pattern forming? Let's see. Okay. So did we get calls too? You know, I can't keep track of what we got. We got calls. We got puts. Oh, we got calls. Okay, cool. So we should be, that's a good thing. Let's go look at the money on those. Let's see. Our love calls are up $22. Not bad. Up 22 on those. Ford is the one that's killing us. Ford is down $16. How many pennies did Ford? What the heck did Ford do? Let me go back over and look at Ford and see what's happening with Ford. Oh, price shot up. Oh, shucks. You all see that? Look at this. Ford took off. What the heck? Well, I love these little stair steps. Let me look though. Let me look at the 5-minute on Ford. Look at that. 5, 10, 15, 20. We gonna see. Because I think we bought Ford puts. I don't know if we bought calls. Yeah. Okay, not mad. I'm not mad. Okay. So that's today, you guys. We bought calls, we bought puts, we learned how to do, or we went over how to do an OCO order. If you guys want, I can really quickly go over support and resistance and what, how to plot support and resistance. I'm trying to think. I'm going to look at these on the daily chart and see which one might be better to do support and resistance. Let's see. I've got, that looks pretty good. That looks good on Ford. Let's look at love. See if that might be good to do support and resistance too. I think Ford might be better for going over how to put support and resistance on your chart. And support and resistance are nothing more than reference lines. It is a line that you put on your chart to show you a particular price point where price gets stuck, or you'll see it. Let me show you. Okay, so since we have some Ford contracts and we've been talking about Ford, learning how to do support and resistance, you'll see why it's important. But to begin, if you wanted to plot a support line, and by support, I mean price will sit on top of that line. And when people say that it respects that, it'll bounce off of it, it'll sit at it, but it won't go below it very easily. So it's kind of like a floor. There's a particular price level that stock just won't go lower than. It's just not going to do it. Or if it does, it takes a lot of momentum. Something has to happen for that price to go below that floor. So you could think of support as a floor, a price floor. Resistance then would be the ceiling, where the price might be going up, but it's not going to go higher than that. That's resistance. When the price gets there, it resists. Usually at support or resistance, the price, and this makes sense, y'all, it can only do a few things. Let's take support. Let's say you've got this floor and price hits that floor. Either it's going to sit there and just say, well, for a few days, a few hours, a few minutes, it doesn't go any lower. And you'll see candles form, and the wicks might go below, but it can't go below. And you'll see a cluster of candles that can't penetrate it. That's one thing. Another thing price could do is it could hit that floor and bounce up. You'll see that too. So if price is dropping and it hits the floor, suddenly you'll see a green candle where price just rejects and bounces back up. Or it could consolidate. It can consolidate and stay there. That's where just many candles kind of congregate there. They don't do anything. They don't go up. They don't go down. They just consolidate. They could reject, bounce up, or it could penetrate and go down. It could just be real disrespectful to that floor and it could just go through. So let me show you a support line first. And how do we draw that? Up here, I'll show you from down here. You see where the cursor is at the bottom? If you tap it, all these drawing tools come up. The drawing tool that we want to plot support with is called price level, because that's what we're doing. We're identifying a price level. You'll notice that a crayon comes up. And I usually like to start on this side, because in order to draw this line, you have to drop like an anchor first. And you'll see when I drop this anchor, did you see that little blue box? There's a little blue box and it stays put. So now what I'm going to do is run this line all the way over to the other side. And what I'm doing right now is I'm looking for any area on my chart where I notice, man, these candles are clustered here. Something's going on. And here is where I'm going to drop my first. This will be a resistance. I'll drop it right here and I'll tell you why. Can you guys see that red line? Let me go ahead and get my cursor back. Can you see this red line here? It stretches all the way across. And I put it here because I noticed that this price touched this, but it couldn't go above it. I noticed that right here, this candle came from under, it touched it, but it didn't go above it. And I noticed here, hey, something's going on. Price, it's touching this line, but it didn't go. I can't see that far, but something's happening there. We hit a high. It bounced off of that line. So that would be considered resistance. This candle touched it and price rejected and went back down. This candle touched it, price rejected and went back down. That is a line of resistance. And you can see it's right at $16.41. So that's significant. We want to know that generally we could expect that around $16.41, I'd be curious to see what the price does, because it resisted here. Look, this little wick got close, man, but it couldn't go above. Same here. So you want, when you're drawing a line of support or resistance, you want to get as many touches on that line as possible. So that's resistance. This serves as like a ceiling, and the price couldn't penetrate. It couldn't go. Tried to, but couldn't penetrate it. So I'm going to look for another area of price where you can see a significant number of candles either got stopped there. Something's going on, because you can see the candles clustered there. So I'm going to go back over here and I'm going to drop another one. Let me get my price level tool. It's this dollar sign right here that says price level. I'm going to drop an anchor over here. And I'm going to slide over and I'm just going to start to look. Okay, so like right here, I can see, this is a good one. This is a good one. And it's not an exact science, you guys. It doesn't have to be perfect. We're just looking to see like an area. We're really looking for an area where price congregates. And I'm going to drop this one right here and hopefully you guys can see it. Let's see. I want to make sure I got it right where I want it. Okay, I'm dropping this one. Let's go over here. I got to drop it on this side too. You can drop the anchor on either side, the left or the right. Yeah, I like this one. Okay. So this looks like at a price of around $13.85, $13.90. Why did I put that there? Let me get this out of the way. Because look, right here, this line, oh, and you might as well know this. That price level, it could be support or resistance. And in this case, I want to show you. You see where the price hit? It tapped it, looks like three times, but it couldn't go beneath it. It rejected, went up, and then finally it did get beneath. And then this same line that was support here, because it couldn't, it's sitting on it, it becomes resistance. Now the price can't get above it. Now look, here it is again. It keeps testing. It can't get above, can't get above, can't get above. Finally, it breaks above. But then come over here. Again, this is months later. This price still struggles right around $13, just under $14. It taps. It can't get above it. That's pretty significant. It does it here again, taps. It tries it here. It gets above it a little bit, but it can't stay. Here again. So around $14, the price of this Ford stock, you can see, okay, that is significant. We want to know something's happening around $14. So support and resistance don't have to be the highest or lowest levels respectively. No, it doesn't have anything to do with that. I think it has more to do with price and how price behaves at a particular level. And we can see, y'all, this makes sense. Around $14 for some buyers, that, I'm going to say it's more of a resistance because it rejected off of here. Price couldn't get above 14. The market just wouldn't support it. It would not get above $14. Y'all, listen, look at all of this time. This is how much time it spent under $14. Look at all this time Ford's price spent under $14. It only stayed above $14 here for August through September. It only stayed above $14 a little bit here for 2 months. Here's June, July, August, price could not get above $14. October, November, into December, the price could not get above $14. And look, it hasn't been above $14 since. We need to know that, because if we're purchasing a call expecting the price to go up, y'all, the price not going up to $14 too readily. So it's reasonable to say, well, yeah, price hasn't been above $14 in months. So it's reasonable to assume that even if we purchase the call expecting the price to go up, it's not about to shoot up to $14 readily. Something would really have to happen. I'm talking about it would have to be some great earnings news, something in the news, some new innovation, something would have to make that price jump up, because for months on months, it could not get above this resistance. You can also see that a price level like this can also be a support, because here it bounced and it sat on it for a few days. It sat on it here for, a few days. It stayed above, but mostly $14 has been a resistance for this price of this stock. So let's see if we can find another price point for Ford where you could just see the candlesticks cluster. Price hangs out there. So I'm going to drop an anchor on this side and see if we can find another price level that's significant. So I'm going to take my little crayon, drop an anchor, and I like to just slide over to the other side. And then I move my line up till I see that it touches as many touches as possible. So this looks pretty significant, this low. Yep, I'm going with that one. Okay. So, and it doesn't have to It doesn't matter if it goes through bodies or wicks. You just want the most touches possible. So I'm going to go right around here. We see that low, but that doesn't give me many touches. If I move up a little bit around $11.09 and drop it, you can see now, doesn't that make sense? I hope you guys can see this. Look at that. Price, no matter when it bounced down, it didn't get below $11. It got down to 1061, but it didn't stay there long. All these touches, this price level that I just drew is around $11. Look at this. $11, that's a low. And all these touches, touch. It touched and then bounced back up. Touched it, bounced back up. It touched it here and bounced back up. It touched here and bounced back up. So it's reasonable to assume that's way back in April, May, June, July, August, September, October, November, December, January, February, March. That's almost a whole year. The price hasn't gotten lower than $10.61. That's significant. That's a very long time for that price level to hold. So you want to know that. Why? Because if we purchase calls today, right? Or we purchased a put means the price is going to go down. Price hasn't been below $10.61 in a very long time. So it would be reasonable to think that prices at $11.62 today is probably not going to dip below $10.61. Something has to happen. We've gone through earnings. We've gone through dividend payouts. For almost a whole year, price has not gotten that low. So that's why support and resistance is important, because it gives you some more insight into how price is behaving at particular price points. And now when we go back and look at it, look at this, you all. We can see this price has been trading in this range. All it did, look, it went up, it went down, it went up, it went down, it went up, it went down. It's reasonable that it would probably stay. Look at how long it stayed in between these two prices. This is a numbers game. It makes sense. Price has been trading in this range. Let's see, it entered around October and it went down, didn't get lower than 1109. It went up. It didn't get above got a little bit above $14, but it came right back down. It went down again to $11, back up to $13, almost $14, back down, up. That's all it's doing. So if you know that, then you know, okay, it's reasonable to see prices trading basically in a $3, okay, a $4 range. Let's say 1066 to, no, that's about a $3 and some change range. That's all it's doing. It's trading in this range. Now, what I like that Johnny and them showed me is that you can do trend lines too, to see if a price breaks out of a trend line. And trend lines are generally at an angle. And I'm not good at trend lines, but I'll try to show you one. I think you can change the color of these things too. Somebody showed me how to do that. So let's go in for a trend line. And I think you can change the properties of it once you do it. But here would be an example of a trend line. I'm going to take this high and I'm going to drop this line here. And then I'm going to come all the way down. I'm looking for the most number of touches. And I'm going to go and drop this trend line. Let's see, did it touch? It touched. I'm going to drop it here. And I need to change the color of it. So let me see if I can change the color. Maybe you guys will be able to see it a little better. Let me see if I double tap on it. I'm on this trend line. Yes, I'm going to edit the properties. I want to change the color. I'm going to change this to something we can really see, like this bright yellow. Okay. So now you can see that trend line a little better. It's yellow. And then I'm going to draw a corresponding trend line right underneath it. So let me get it again. And you'll be able to see where price breaks out of that trend. So I'm going to start here. I'm going to get as many touches as possible. That's a lot of touches. And I'll just extend it. Let's see how many touches can I get realistically. Okay, I'm gonna drop it. Oh, let's see. That's enough touches. And I'm gonna go ahead and change the color on that trend line. Edit properties. I'm gonna change that to yellow too, so you can see it. And a trend line is helpful. So look, if you see prices trading in this little channel right here, but suddenly, look, you can see it. It breaks out. And what happens? Price goes up. It broke out of this channel. So that's another reason. Please, plus trend line learning. Yes. I need to learn more and watch support and resistance education. This is good. Yes. Plus trend lines. I'm telling you, y'all, you need them. I have traded without, I know what I'm doing wrong, honestly. I honestly do. And to continue to do things, that's why I'm paper trading. I promise you, because I know what I need to do. I need to, for QQQ, I need to go through and plot all those support and resistance lines. I don't always do it. Yeah, you're going to lose money. I don't always plot my trend lines. If you plot this trend line, if somebody had plotted this, you could clearly see once price broke out of this and it started going up, you can see the breakout. That's called a breakout because it had been trading in this channel. And then suddenly price broke out of that channel and it was off to the races. We could do this one. Let's see, we could do one this way too, because it was an upward trend. We could do a trend line here, catch all of those, and you would see exactly when it broke out of that, and then price started to head down. So trend lines and support and resistance tell us so much about price action and behavior and what we can expect. This would have been, if somebody had done this would have been a perfect time to get you, this is days, a call, 1, 2, 3, 4, 5, 6, 7, 8, out maybe a week and a half. That was good money. And you would have known that it had broken out. Then look, it went above all of those. Wow, it broke above all of these, the support, the resistance. That was some money to be made. Let me see. That was from July. Look at it. What I really love about it too is look at how your TTM squeeze is in confluence. And confluence means in agreement. Look at your TTM squeeze. Look at all that up, 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 up. Yeah. And look at the breakout point. It broke out right here. By this time, once it has broken out here and you see your TTM squeeze, look at that. Look at your RSI headed up, 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 and all of that. So it is necessary to learn and plot them, y'all. I don't do it, and I should. I think it makes you a better trader. It's a part of the trading toolkit. If you aren't using support and resistance and trend lines, there's another little trick I want to share with you guys too, but I got to practice it. It's Fibonacci's. I love Fibonacci's because they give you even more information about price and, what price may do. I just don't want to overwhelm you guys with it. So let's get over here and let's look at our love contracts and see if we're making any money on love. Love. Let's see. Let's get to our 15-minute chart and see what she's doing. I don't know. She's doing a little bunny hop, but not a lot. She isn't making any real money, which is bad for our play, our simulated or our paper money. But this is good news for me because I really do need her to come on back down here to that like $29. If she come back down to $29, would be good. That's like 50 cents. I would like it if she came down. Yeah, she can come down $1.50. That would be even better. So I'm going to go ahead, since we're doing this, I'm going to go ahead and plot them for love because I need to know, and I probably should have done that before. So I'm going to go to the daily chart on love, which is Southwest. And I'm going to go ahead and plot support and resistance. Again, I come down here to the drawing tools. It says active tool. I want to come up here to where it says price level. It turns into a crayon. And I always like to start at the top, to be honest with you, because that's the easiest one to see. So I'm going to drop this here. It's so easy to see, you know, when you run it and you see these top values. That's easy. That's like a no-brainer. I like this because this one is almost a support and a resistance. It really is. I'm going for it. Because if I drop it like right here in the middle, you'll be able to see that it is both. It acts as, at some point, as support and resistance. Yep, I'm going for it. I like this one. And I'll change the color. Let's change this color. Nope. I don't want that. Let's see. I'm going to drop it. Let me do this. I'm going to get out. And I want to hit this and change the color of this line. No. Price level. Let's see if I do it with 2 fingers. Yes, edit property. I'm going to change that line to bright. I want something that we don't normally use because I don't want it to be confused. We don't do orange. I'm going to change it to orange. Okay. So you can see, I just plotted this line. It's resistance in some places, and I'll show you where it turns into support. Okay, so this is so clear to see. Price came close. It barely touched. And this was at like $40.86. Yeah, $40.86. Price tried to touch, got close, but it can't go above it. It's resistant. We can see it came close here. It got above it a little bit, but couldn't stay above it. That's all these touches around $48 and somewhere between 68 cents and 86 cents. So not quite $41. If we rounded it off, we could say price got close to $41, but couldn't get above $41. That's significant. But look here, at this time when it was at a high, it couldn't get below this $41. So this, in this case, is acting as support. Look at touched, bounced off, touched, bounced off, touched, and finally it broke through. So at this point, that price point of around $41, this was support. Here, it's resistance. Now the price can't get above $41. That's important to know. It's trading at $30.51. So we kind of could be pretty safe. It's safe to say since June of last year, price hasn't really gotten above $41 in any significant way, and it didn't stay. So that would be a resistance line. Let's go ahead and plot another one because we want to get in here and find all these significant price levels. You guys can see it now. Can't you see where all these candles are clustered right here? And they cluster kind of around the same price here. And they clustered all around the same price here. Yeah, that's basically where we are. So I'm going to start on this end. I'm going to drop my anchor and I'm going to slide over. And I'm just looking to see how many touches I can get on this line. And it's okay if it's a little body and a little wick in there. That's okay. It's not an exact science. I'm going to go right here because it looks like somewhere around $31. Hallelujah. It looks like price is going to have a little trouble because here it served as a support. All these candles. This is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. A lot of days. Price could not get below, what is this? $31. Couldn't get below $31. Couldn't get below $31. Finally got below $31. Now I'm curious. I'm hoping it doesn't go higher than $31, y'all. Because remember, I got some puts in real life. So that's why it's significant to know. Let me go ahead and change the color. Nope. Let me do this. Let me change this to my cursor, and I'm going to change the color of this. See, I think I have to do it with 2 fingers. Yep, edit property. And I'm going to turn that to bright orange too, so we can see it. And you know what? We can make these a little thicker too. Yeah, I'll make it a little thicker so you can really see it. Okay. Did you see that? I want to make it should be orange all the way across. I don't know why it stopped there. Oh, that's because this thing, it's orange under there, but our stop is there. So I'm going to make this a little thicker too, so you can see this line. Edit properties. I'll make it a little thicker. Okay, so now you can see our support and resistance lines are in orange and they're a little bit thicker. We could go in here and find some more because look, price clustered right around here too. Look at that. Bam, all those touches. We could get all of those. And yeah, that's another one too. So I'm going to do another one. I'll drop an anchor over here. We're looking at love, and I'm going to roll it over to the other side and slide it till I can get the most touches possible on this line. Okay. And then I'm going to go in and change the properties. I'm going to change it to orange so you can see it. And I'll make it nice and thick. Bright orange. There we go. Okay, so there's another line, and I hope you can see why I picked this one, because look at all that. And what price is this? This is about $35, about $35. Price got held up. And then here again, look, sitting, and it acted as a resistance too, because these can't get above it. Phew, good for me, because I don't think this is going to be a runaway. We've got a low of 28. And we've got some resistance here around $31. Hallelujah. So I'm hopeful. Let me go ahead and get my cursor back, and I'm going to blow this up a little so we can see. Okay, so we're looking at the bright orange lines. I know it could get a little confusing, but those bright orange lines are our support and resistance. So I wouldn't be surprised if the price got up here and it got held up a little. Well, we can see it's at 30.48. It can't seem to get above 30.50. Thank goodness for me, because I need that. I need this price to respect this, and I want it to bounce off of this and come on back down. That's what I really needed to do. Come on back down about $1.50, and we can all go home happy. Okay, so that's support and resistance. We talked about trend lines too. Let me go ahead and do a trend line on here. I might as well. Let's see if I can find a trend line. This was a breakout. We saw that. Let's look at this. I don't know. I don't want to do too much with these trend lines, y'all, because it's not my strength. I would rather have one of the guys come in and talk to us about them. But at any rate, you can see how support and resistance can help you. And of course, I would go ahead and grab this one, this high. Let me just put it in here just for kicks, because we've got this high here that we haven't been able to penetrate. And that has a few touches too, right around $48.50. So I'll drop that one there. I'm going to change the color, change it to bright orange. And you guys can't see it because it's a pop-up, but I'll show you maybe in class how. That's what we'll do. I can go over support and resistance and all the things we kind of went over today. So now you can see this is my new. But look, all these touches, touch, but can't get above it. Can't get above that 40. It's like $48, $49, you might as well say. It's not going to get above 50. The high was $50 and some change. We haven't been above that since. We have this low down here, right around, right around $30, $31. Yeah. And we saw that low at $29. It hasn't been that low since. So we had a low. We're trading in this range of about $20. $30 to $50. Love has been trading in this $20 range since last year. It hasn't gone above 50. It hasn't gone below this $29. So yeah, that's why you want to do your, yeah, I'll repeat this in a Zoom class. I think this is a good one. Support and resistance and trend lines. I think I can do support and resistance. I'll pull some materials too and put support and resistance in the community tab. We've got about 15 more minutes together. So is there anything that anybody wants me to go over in the last 15 minutes? We can go back and look at our money and see what the heck is happening. Okay, $9. So we made $22 on this, which is our love calls, which is cool because remember we lost $24 on that. So we are down like $2 total. Oh, we got stopped out another trade. Well, a put. Yeah, we don't need to buy puts. Today was not a put day for love. Yes, you're telling me. I know. Today was the day to buy calls for love. Love, it was a call day for sure, not puts. And then Ford, we purchased puts. It was a day for calls as well. So let's see. I'm pretty sure this market watch was telling us that. Yeah, I mean, it's green. It's got some red in there too. Let's look at all public companies. Baba had a great day today. Woo, we need to look at Baba. So it's a mixed day, green and red, and the day isn't over. So I'll leave those contracts that we purchased and we'll check on them because we've got time for them to do whatever it is they're going to do. I appreciate those stops that we put in today because we got stopped out of 2 trades today and we only sacrificed $20. Not bad. To me, that's a good trading day because Lord knows I have traded without those stops and it's no bueno. Don't do it. Don't do it. We set those stops pretty tight. We set them somewhere between 5 and 8%. I like that because you don't want to lose more than $20. We didn't get the direction right. The correct direction for love today was calls. Loves, and let's look at the chart. The chart told us the same thing. Let's go over here to our daily chart. I'll go to the 15-minute chart. Yeah, the right call today was to buy a call, and especially if we were going to get in and get out. We had that big movement this morning, and then we had a little more up again. And so, yeah, today was not a day to purchase puts. And look at our RSI. It's been up all day. Look at these bars. They've been green all day. Look at your TTM squeeze, been blue all day. No red in sight. No red in sight. And the RSI has been elevated above 50 all day. So that is definitely bullish. Also, too, look at how big the green candles are. We've got 1, 2, 3, 4, 5, 6. Oliver taught me that. He said sometimes you can just count the candles and see 1, 2, 3, 4, 5, 6, 7. More red candles, but look at the volume. Look at the size on these green candles. It was clearly a green day. So let me go to the 5-minute chart and look. Yeah, it was definitely a green day. And you can see that green. We had a little bit of red there. Look at our TTM squeeze, all blue. We didn't get very much red or yellow down in there, all blue. Looked like the trend was going to wane and then pick back up. So yeah, let me go look at from yesterday. Yep. And the percent change, we're up 1.28%. And even Ford is almost up 1%. So yes, this was not the day to get puts for either one of those. QQQ on the other hand, let's see QQQ on the chart. It's probably a good day for some puts. Yep, you could have made some money today. It went down, let's see. Could we have made some money? Yes, Lord. If you got in first thing in the morning, it was at 308, got all the way down to 305. $3 drop. That's significant. Okay, it says, I'm curious about the straddle strategy as a means of risk management. How to do it. I understand it theoretically. You better than me, because I do not understand straddles. I'm not gonna say I don't understand them. I don't do them yet. Straddles, condors, all of those, yes, because I think in theory you buy a call and a put, or you buy two calls or two puts. It's a combination of contracts, and they help mitigate your loss. That is a little bit beyond my scope. I'm a new trader, Carol. That's beyond my scope. So, but what I'm glad to do is I can lead you to a place. I am telling you right here, right now. If you go to TD Ameritrade's, you can go to their YouTube channel and type in straddles. You'll get all kinds of webinars, videos, all kinds of information, and I trust them. I'm going to show you guys one other thing. We could go to the education tab and we could put in straddle. And see what we come up with. Improve your investment results. Nope, nope, nope. Let's see if we go to the Learning Center, if we put in straddle. Uh-oh. And see what we come up with. Okay, equity straddles, long straddles. Okay, maintenance requirement for iron butterfly spreads. Here's a straddle, for example, a long 50 straddle. You can hit this thing. It'll give you all the information here, but I want to show you, oh, there's our stop limit order. I want to show you another place that you can go. So I'm just going to come out of this for just a second, and I'm going to go over to YouTube, and I'm going to go to TD Ameritrade. And they have a website. I mean, they have a YouTube channel. So I'm going to go to it, and I'll pull it up for you once I get there. And you can search straddles. So let me pull you back in. Whoops. And I'll show you where I am. Hold tight 1 second. Okay. Okay. So who asked that question? I know we're preschoolers here. It's okay. I was a preschool teacher and I'm a preschool trader right there with you. Okay, yes, please subscribe. You see, I'm subscribed to TD Ameritrade. So I just went to TD Ameritrade's YouTube channel. I typed in straddle, and it tells you how to set up a straddle strangle swap on Thinkorswim. Demonstrating 5 different trade examples. I'm sure somewhere in there's a straddle. Combining option strategies. A straddle is a combination. It's not just one single, like what we purchase. What I do is a simple call, a simple put, because I understand that. I understand what I'm doing when I buy one call. Either the price is going to go up and I get paid, or the price is going to go down and I'm going to bail on that trade. This strategy is where you combine more than one options contract, and you are trying to make sure that the price lands somewhere in between, if I'm not mistaken. And I won't say too much, because I'd rather you go right over here, trade it, all of this stuff. You can find it. If you can't find it here, you can also go to Fidelity. Fidelity has, if you have a Fidelity account, you can go over there. They have an education page, all of them. I'll show you one other resource really quickly because we got like 7 minutes. I'm going to show you this other one. It's the OCC. It's the options. Let me put options in here. It's the Options Clearing Corporation. So let me just cue it up, and then I'll show you where you can go there and find your topic too. I want the OIC too. Hold tight. The OCC is the Options Clearing Corporation. Let's go to OIC. That's their education division. It's the Options Industry Council. Check out both of those. And let's try it again. I'm going to put in straddle. Okay, perfect. This is exactly what I want to show you. So hold on 1 second. Okay. I'll pull it up. I am on the, I think this is it right here. Yes. Okay, I hope you can see this. This is the OIC, and the OIC is Options Industry Council. You can see optionseducation.org, and I just typed in straddle, and then they'll tell you, here's a long straddle. This strategy consists of buying a call option and a put options with the same strike price and expiration date. And what you're trying to do is make sure that the price winds up somewhere in between there. There's a short straddle, a short strangle. There are butterflies and iron condors and verticals. Listen, you could wear yourself out. So let's go ahead and click on long straddle. It gives you a description. It gives you a summary. It gives you an example, the maximum gain. The only thing you could lose is your premium. Why would you do this? The long straddle is a way to profit from increased volatility or a sharp move in the underlying strike price. So things like earnings, news, all those things increase volatility. You know, that's a spike in price, either spike up or down. Talks about the max loss, gain, profit, what you need to break even. Volatility, extremely important. This strategy's success would be fueled by increased volatility, implied volatility. Even if the stock held steady, if there were a quick rise in implied volatility, blah, 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 blah. Time decay, yeah. So there you have it. This is the OIC. Here it is. I'm going to give it to y'all for free. If you go back and watch a video, let me pull it up. I'll show you. It's on my page, and then I really do. We got 4 minutes. I got to get out of here. I'm going to take you to my YouTube page, and I'll show you where you can find all these free resources. So let me get over here. Go to my channel. And let me get you back in here. Hold on 1 second. Okay. Get you here. Okay. So if you go to my channel, From Lack to Legacy, if you go to videos right here, you're going to see this video right here. It says Black Women, 401k taking a beating, be your own hero. This one, it says the OCC has options classes. If you click on this video, it will show you.
So I'm not the smartest guy in the world, but I made $49,000 in the last 30 days copying and pasting.
Let me skip the ad. My name is Sandra. Let me skip this, and we should get right into it. That's the quote. Okay, resources. Here we go. Yikes. Where is it? Okay, where is it? It's coming. It's coming. It's somewhere in here. It'll come up. Anyway, watch the whole video. There it is. Here we go. Here we go. Here we go. So here is the OIC catalog. I'll play it, a little bit of it. But you can see all these classes for free. Go take the classes, y'all. It's self-paced. You can see the brochures. They got literature. This is just where I went. Where that little icon is, I typed in straddle. That's the OOC, OIC. Anyway, That's the video that will show you where the free classes are. Here's another video right here. It says Fidelity and TD Ameritrade free classes. No bull, no joke. Go to both of those videos. That one video says the OOC, free classes, free resources. This video, this is Fidelity and TD Ameritrade free classes, is not a joke. When I tell you free, 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 free. And it's not just about options trading. This is about investing, period. They will take you all the way back to what is a company? Why do companies sell stock? There's no reason for us not to know. Anybody who has a 401k, anybody who owns any stock, I don't care if it's just one share of Apple, you should know what's happening. You should know how to look that chart up. That chart that we looked at today for those options, it's the same chart. It's the same chart for your stocks. That chart is telling you this is what your money is doing. That's what your investment is doing. So thank you guys for another beautiful, beautiful, beautiful session. We will have class this Wednesday. We usually do it at 6 o'clock Eastern Standard Time, which I think is 5 o'clock my time, but I'll be posting it. Yes. Please, let's get financially literate, folks. It's no reason for us not to be. All this information is out here for free. I wouldn't even give it to you if it wasn't free. I wouldn't even send you to a paid resource first. I will always try to find something free. And what I'll do, I think I'll post on the community tab sometime this week. I don't want to make a promise, but sometime this week, I'll get something up there about support and resistance and trend lines, just so you guys don't have to look for it. And on that note, it's 11 o'clock. I'm out. Y'all know I'm going to the park. I'm going to put on some clothes and I'm going outside to play today. Thank you, Marilyn. My drink. That's my sister, y'all. That's my sister. I appreciate you more than words can say. I will see you guys back here I'll see you Wednesday night, and then I'll see you back live trading on Thursday. Peace and love, folks. Adios.